That one's on.
You can mute him.
Okay. Yeah. Check. Check. All right, if everybody can take a seat. Well, good afternoon and welcome to the House Insurance Rate Study Committee's fourth and final hearing. Welcome to Gwinnett County. Thank you all for the great turnout. I know we've got some committee members who are still on the way, so as you come in, definitely take your seat. The Gwinnett Daily Post, I think, got it right. The local media about this meeting, they said, share your love or hate for insurance rates with lawmakers. Insurance rates may not be the sexiest topic of conversation, but a group of lawmakers wants to hear Gwinnetians talk about it this week. And then it goes on to talk about our study committee looking for ways to make insurance more affordable for hardworking Georgians in terms of rates, what to do with profits, particularly on auto, as well as claims processing. So that has brought this is the largest number of people I think we've had at the study committee. And so we really appreciate you coming out. And I would like to say, in terms of knowing what we're going to do from here, we've got about a dozen witnesses or so today. We've got a knowledgeable head of the insurance and risk management program from the University of Georgia, as well as the insurance department, and a number of other speakers. We are going to put together a report. A lot of you have asked for a report, and there will likely be multiple pieces of legislation. We'll have a big study committee bill, but there are some specialized areas, such as you heard a discussion on the premium tax down in Macon. If anything is done with that, that probably would be a separate bill, and we are looking for things to put in the study committee bill, as well as insurance department bills, which also may be multiple. So what I'd like to ask is, if you have any ideas for proposed legislation, if you can get them in the hands of the committee members, and committee members, if you can get it to me over the next week by Christmas. And also any summaries, both from committee members as well as members of insurance department, the insurance industry, other folks who have followed this committee process. Definitely now is the time to get that in, any summaries, any proposed legislation over the next week. So I want to thank everybody for being part of this process. I'd like to call up Paul O. from the Gwinnett County Chamber of Commerce. Paul, are you still in here? All right, we'll call on him next to give a welcome. I think he may be helping get this. He had a phone call. So with that, let me call up Bryce Rawson from the Georgia Department of Insurance to be our leadoff speaker today. He has some news from the Department of Insurance, and I'd like to thank Insurance Commissioner John King. He personally has come to 2 of our meetings, but the department has had 1 or more representatives at all of our meetings, and we appreciate their engagement in this. So Bryce, give us an update from the department standpoint.
Mr. Chairman and members of the committee, thank you again for having me. Again, my name is Bryce Rawson. I'm the Director of Legislative Affairs for the Georgia Insurance Commissioner's Office. And I know we have a long line of speakers behind me, so I'll try my best to be brief. We just wanted to get up in front of you all and announce another wave of savings for Georgia drivers. Some of y'all may see in the release that we did put out late last week on Friday. But there are 2 companies, Liberty Mutual and Safeco, who are announcing they're all about 5% rate decreases for Georgia drivers. This is just the latest decreases that we do have, of course. A few weeks ago, we did announce State Farm. They dropped theirs by about 10% over the course of the year. We just wanted to say this as an accomplishment by the Georgia Insurance Commissioner's Office, of course, working with Governor Brian Kemp, Lieutenant Governor Jones, Speaker Burns, and members of the General Assembly. I think it reflects the hard work that we're doing to combat insurance fraud and the success of the tort reform legislation that the General Assembly and Governor Kemp did get through last year. Just want to be very brief and mention that. And if you guys have any questions for us related to that topic, I'd be more than happy to answer them.
Thank you, Bryce. And I know Chairman Joseph Gullett is working on some record requests, and so I've asked him to work with you today. So if y'all wouldn't mind covering that ground so we can get that in the committee's hands, and I appreciate you working with him on that. And with that, Paul O. is back. Paul, come on up. Thank you for hosting us at the Gwinnett Chamber, as well as introducing us to Primerica. Primerica is headquartered here in Gwinnett. A.L. Williams Started in the 1970s. A football coach from South Georgia started that company, provided a new insurance product. It's now aimed at folks 30,000 to 130,000 in income, and they now have $1 trillion of insurance in force. So that's what innovation in insurance will do. Thank you for getting us to Primerica today, and tell us about the Gwinnett Chamber.
Thank you, Chairman Reeves. Good morning, members of the committee. Paul O., VP of Public Policy for the Gwinnett Chamber of Commerce. If you did not know, you are sitting in the largest chamber building in North America outside of the U.S. Chamber of Commerce in D.C. So for those who represent Gwinnett County, that's what you can tout. And nevertheless, everyone else who represents different parts of Georgia, you can say that the second largest chamber building in North America resides in the state of Georgia. Appreciate you guys being here. Appreciate what you guys do to serve our state. Business being the #1 state of business consecutively all this time is very important, and what you guys do to take time to listen to members of the community and the business community in particular means a lot to us. So thank you for being here.
Thank you, Paul and Nick Messino and Gwinnett Chamber family for having us today. David Hartman, raise your hand. If you want to speak and you want to make sure you're on the list, definitely talk to David Hartman or okay, it's over there on the table. Just double check that you're on that list. I'd like to thank David for the work he's done, in addition to Sarah Crittenden with Legislative Counsel, Shakira Nash at 401 Coverdale Legislative Office Building, Sua Ibrahim from Georgia State Law School, Professor Weston, who spoke to us, got us an intern on the committee, and then Riley Christie, I know is going to be working on this some from Georgia Tech Public Policy, as well as Marjorie Guerrero. So thank you all for putting in work on this. All right, who wants to hear from the University of Georgia? We've heard from Georgia State, we've heard from USC. We are honored today to have the head of the Insurance and Risk Management Program, Dr. Robert Hoyt. So Dr. Hoyt, come tell us what we need to know about insurance rates, insurance profits, claims processing, and anything else we need to know. And thank you for Thank you. Thank you.
Well, thank you very much. It's my pleasure to be with you today. I'll let them get that presentation started. Obviously, I've had a long career at the University of Georgia, and I was asked to offer a few comments to the committee from my perspective as an expert. I'm not speaking on behalf of the University of Georgia today, but certainly our connections are great, and we appreciate the Equal Opportunity Chair in giving us an opportunity to share some insights with you today. So just a quick overview of some of what I'll touch on with you in the next few minutes, and certainly would welcome any questions at the end or as you have those as you continue your work. I can say in reviewing materials that have been shared with you in the past, you've gotten a lot of information. And so one of my goals today was to try to help maybe just put a little additional context to how you might orient to some of what has been presented and what will be presented today as you kind of reflect on the environment in Georgia. I'm going to spend just a couple quick moments on the role of insurance within risk management, because I think that's important for us to remember. Understanding some of the dynamics in the marketplace, a few words around that. Obviously, you've got representation that's been here along the way from the Department of Insurance, but I want to offer a little perspective on the important role that regulation plays in the context, and therefore sort of how you might think about that in your legislative duties. And then last but not least, I'll leave you with a few words about what I have shared with a number of legislative audiences over the years, because I've been fortunate to give talks about insurance. That's what I study and know, but I've had the opportunity to do that to groups from legislatures across the U.S. And one of the important things is all the different things that you as legislators touch in terms of regulation, legislation that does impact very importantly on what we're here to talk about today. Okay, so it doesn't always have to have insurance in the name to be critically important, and that's something that I want to just share with you briefly as we talk today. Okay, so with that in mind as a roadmap, A few words in a traditional sense. I'm going to give you kind of a quickie on economics in general, but also in this case, kind of a quickie on the insurance concepts that are so important. And when we think about where insurance falls, obviously organizations and individuals have various options. What do we think about avoidance? Well, as a society, there are going to be cases where organizations have to go to avoidance, don't produce products, don't provide services. But at the end of the day, I don't think we like the outcome if organizations, and for that matter, individuals, feel like that's the scenario that they have to proceed with. Retention, control, what can we do to reduce risks and so forth? That's what organizations are facing. At the end of the day, insurance fits in as one of those tools, but a critically important one. And as I drove over here today, I know it wasn't pre-planned, but I happened to pass through the intersection where I was involved in the, knock on wood, the only auto accident that I've had in the state of Georgia. No accident today, but I certainly didn't have any problems remembering that situation just up the road on I-85. Okay, so insurance is critical to me as an individual, critical to all of us, critical to consumers in Georgia, and certainly plays a critical role for businesses and industry, as we well know. So let me turn our attention to the more direct theme that you've been tasked with. And I know there's a number of words up here. I'll try to give you the critical points that I'd like to share today. But certainly this information will then be available to you for reflection. As I reviewed some of the information that was shared before, I think as you think about the state of the market of the insurance markets in Georgia, obviously it depends on various segments as to which insurance segment or market we're talking about. But we do still have a relatively robust number of carriers operating in the state, as you heard from Steve Manders in your November meeting. That important point that I did want to call out, though, and you've probably also heard this from constituents, is that in many cases, that doesn't mean everybody can access that coverage. Carriers, for some reasons I'll touch on briefly in a minute, certainly may be pulling back from certain segments. We may not be able to get the level of coverage that we're desirous of. And so some of that is continuing to occur. However, Georgia is an attractive state in a general sense for doing business, right? There's a lot of opportunity in this state. A lot of the trend lines in terms of growth and so forth are things that would cause insurers to, at least at a high level, have a desire to do business in the state of Georgia. And you see kind of where we stand with regards to premiums across the country, and that strong economic and demographic profile makes us attractive. But most insurance markets tend to meet the classical definition of competitive markets, that we've got a lot of buyers and sellers, that there's relatively standardized kinds of products. So that does exist in the context of Georgia as well, to an extent, right? But ultimately, the role that the agents and brokers play in sharing information and providing transparency, that's very critical to the ability of the market to function effectively. But I do want to emphasize the last point, especially, that to the extent that we can do things to foster and encourage that competitive environment to exist, that basically competition can serve as yet another regulator to the issue of price. Okay, so ultimately, always important to be alert to the fact that that can be an important and does serve in multiple jurisdictions as a important regulator to price. Okay, I didn't get slap happy with my highlighter. Apparently there's a visual image on there with the yellow, so not calling out anything specific there. However, as you note up there, for appropriate reasons, the insurance industry is a highly regulated industry. At the end of the day, and we talk about this in our classes to our students, we're really selling a promise, right? I pay up a premium, but I'm hopeful that and expect that an insurer is going to be there to pay claims, to address the issues that I have. And so for a variety of reasons, which I'll touch on briefly here today, regulation is critical. And in fact, arguably insurance is one of the most regulated industries in the US economy. However, profitability matters, and I know that's part of what the committee is tasked with evaluating and studying. Alluding to some information that was shared with you back in September by one of my colleagues over at the University of South Carolina, Bob Hartwig. He talked about the fact that it doesn't look all that good if you look back historically in terms of the overall underwriting profitability of the insurance business within the state of Georgia over an extended period of time. I added the bullet that you'll see there about Georgia underwriting profitability in 2024. NAIC-based data showed that in 2024, the underwriting return was negative 8.7% versus a much healthier 7.8% positive return across the US. And that at that stage ranked Georgia 50 out of 51 states and the District of Columbia. Okay, so persistent, as with any industry, persistent lack of profitability certainly it has in some segments lead to departures from the market, so availability constraints. And certainly as we have less capacity, and I'll allude to this in just a second, as we have less capacity in the market, ultimately less availability ultimately can lead to higher prices as well. So here's my quick Economics 101. We actually call it 2001 at Georgia, but Economics 101. I don't think anybody would be too surprised to know that critically, really, as you think about any market, is what does demand and supply look like? So that's ultimately going to give us a pretty good indication of functioning, but also price. So on the demand side, one thing that's somewhat unique around insurance is there's usually not a lot of ability to generate more demand in insurance. Largely in a market like the US, it's pretty much fully penetrated. What really does drive growth in demand are things that fortunately have been doing pretty well in Georgia. And I think all of us benefit from that in terms of economic growth, population, in-migration, activity that really has probably contributed a lot to our #1 ranking there as a place to do business, okay? So that's the case on the demand side. To some extent, new risks that organizations and individuals face, like cyber and so forth, will also impact that to an extent, but really demand tends to be driven more by just overall economic activity, okay? On the supply side, really important, and you guys have had things presented to you over time that is giving some, I think, very useful insights into understanding the dynamics in the Georgia insurance market, is understanding what it is that insurers need to write insurance, okay? They need capital, and capital is ultimately the capacity, dictates the capacity that they have to underwrite risks so that they can make good on those promises that are being offered, okay? So with regards to what capital is in the insurance industry, typically referred to as surplus, okay? But ultimately it's just assets minus liabilities. The overall market is relatively sound in the current environment. and that benefits organizations that are seeking a commitment and a carrying through on that promise. Okay. But we do see insurance markets swing from hard to soft markets. And in the language of insurance, what you're all probably very well aware of is for the last number of years, Georgia has certainly been a market. Okay. So difficult access to coverage in some cases, and then increases in prices. Okay. The critical point to take away though from this intersection of demand and supply in this market is what insurance companies are always having to do is make ration decisions around how are they going to deploy the capital that they have. Okay. Are they going to deploy it to Georgia? Are they going to deploy it to Ohio? How are they going to make choices around the locations where capital is deployed? And then secondly, where in terms of the types of lines of insurance and the classes of business that they're going to underwrite, would they make choices about deploying that capital as well? Okay. Many of my former students are successful agents and brokers in Georgia, so I get a fair amount of feedback from them in terms of pressure points that they see. And as noted there, over the last 5 years, and certainly the committee has been hearing this as well, there's been a lot of pressure in certain segments, particularly just a few listed here in terms of apartments, gas stations, trucking, but certainly others that have seen pressure. And I think many of us have probably experienced the second item up there, which is that we see organizations, but also individuals not having as much access to higher levels of liability coverages that may be appropriate or desirable for them. And so those sorts of pullbacks with regards to availability really do track profitability, but also track the fact that insurers, for a good reason, have to make choices about where they're going to allocate that capital to underwrite risk. Okay, so a few other words in terms of just a kind of a framing here as well. And I'll mention one item that I think is probably the most important, at least in my opinion, takeaway from some of the things that I wanted to share with you today. First of all, in the academic space, we talk about objective and subjective risk. How many of you know what the probability is that you're going to be involved in a car accident when you leave the parking lot in this facility? Pretty good, actually. Pretty bad in that sense, okay? Most of us don't really know what those probabilities look like, okay? But one of the benefits of insurance is they amass data, act on objective risk, and send us a signal, right? They send us a signal through that insurance mechanism, okay? So that also provides me with some actionable information in terms of the decisions I'm going to make, okay? So the pricing mechanism, if linked to risk and loss exposures, is a very valuable signal in the economics of insurance, okay? The second point, though, premiums at the end of the day are driven by losses to the largest extent, and losses, expected loss, is really frequency and severity combined, okay? So as you've studied and been presented with information, obviously you can see a lot of what the pressure points are in various areas of exposure simply by looking at what's the implication for frequency, what's the implication for severity, okay? Lastly, the notion in a general concept context of moral hazard, that does my behavior change when I have insurance? Yes. Sometimes it might even be bordering illegal in terms of my behavior change. which is what insurance fraud constitutes and what the state has done a really good job, I think, of taking on as an initiative or set of initiatives. But it also simply does impact my decision making. And so a lot of what goes on in the insurance mechanism in terms of claims adjusting and so forth is trying to mitigate against this issue. Okay. So a little closer to the home of the elements that you've been hearing about up to this point are a few thoughts around cost drivers in the insurance market. And a few of these I know from review of your record have come up, and certainly not surprisingly but will also be called out, I'm sure, in other discussions, are listed here. So we don't need to go necessarily through all those, but as I reflect, and I saw in some of the other material that had been shared before, you see a number of the factors that have been impacting on Georgia, have been impacting other states as well, but those are often elements that are key to kind of understanding some of the pressures. I did add reinsurance costs and availability, because that's also a very important element that the regulators certainly do have line of sight to as well. But it really points to the fact that insurance does end up being a very global business as well. Okay. Let me just briefly call your attention to the information in the box there. I did note this release of information just yesterday, so it's information that had just been released very recently. Indicates that the average business liability claims cost was $97,220. This is average nationally, but increased. That's an increase of 18% since 2022. And was attributed to increases in medical costs, to highlight one of the points over here, and also in growing issues around litigation. And notable to me, at least in seeing this, was that litigation accounts for 40% of claims costs in the data that they had reviewed, and that's up from 27% just 5 years ago. So I know the committee has already had various presentations around liability costs and litigation, but this is very close to home for small businesses, because that's the focus of the information that was shared by that Small Business Risk Index. So concerns that are continuing to be there, but highlighting some of the areas specifically that you've been reviewing. Okay. The profitability by line of insurance in Georgia, obviously a bit small for you to see. I call this out simply. This was information that, as I noted, was presented to the committee back in November by Steve Manders. But I think it is notable, and he had highlighted this in his material, that the insurance lines that we're showing, and this is Georgia-specific data, the lines that were under the most pressure are actually those that would be impacted heavily by litigation. So liability lines, but also lines, and in some cases, a combination of those two factors that are impacted by catastrophic risks as well. So continue to be areas of concern, and certainly reflected here in the Georgia data. So let me take you, and I'll be brief through these items, and we'll conclude here pretty quickly, but just wanted to spend a few moments sharing some insights from at least my perspective, outside looking in to the regulatory process when I think about it across the insurance business generally. Key goals: solvency policing, consumer protection, which can also then include the third piece, access and availability. So cost, premiums, things of that sort, as well understood. All of these are a key to the decision making that insurers are making, but certainly that regulators are attuned to. So I'll highlight a few points quickly, but I think the key point that I wanted to share with you and leave with you in the presentation deck is that there are a number of different ways in which insurance regulation serves to reinforce the solvency and the credibility of the ability of insurers to pay on their promises. Statutory accounting, very conservative accounting structure, very detailed disclosure compared to a lot of other industries. In fact, many of my accounting fellow academics like to do research on insurance. And I said, what are you so interested in insurance for? I said, are you just interested in insurance? Well, not so much, but these are accounting people. But they said because of the quality and the detail in data. Okay, so not something that we as individual consumers have to focus on too often, but there is a tremendous amount of information in that statutory information. Lots of review by the actuarial side, qualified actuaries to sign off on things. Regulators do regular financial reviews. So all those things serve to assure solvency. Heavy involvement in guidance around investments. Insurance company investments tend to be fairly conservative in a broader investing sense. As I note, their quality and how much they can invest in certain what might be viewed as somewhat less stable kinds of investments, very rigorous. And insurers tend to match those to the liabilities that they're observing. Minimum reserve requirements, and then I won't talk you through all these elements, but a host of things that through the NAIC and through the regulators we have as tools to evaluate solvency of companies. Okay, so highly regulated in that sense. Key point that I wanted to call out before I leave the solvency side, though, as you see in the box, is the primary reasons for financial distress. And fortunately, there aren't too many because of the rigor of some of the regulatory oversight, inadequate pricing, and reserving activity coupled with overly rapid growth. Okay. So this is an important caution for those of us that think about it, study, but also interact with the insurance industry and mechanism, is that at the end of the day, if insurers are not able to get adequate pricing and don't reflect that in their reserves, it does have dramatic and unappealing outcomes. In addition, the other issue that the committee has certainly been presented with around catastrophe loss is also very potentially troubling. And we saw this in Florida in some of the earlier years with regards to a number of insolvencies that occurred because of catastrophic losses. On the consumer protection side, just again, a couple of quick comments. Obviously, what the committee is primarily focused on in terms of price evaluation, rates should be adequate, so not inadequate, not excessive, and not unfairly discriminatory, pretty much embedded in insurance regulation nationally and globally for that matter. Policy forms and the products that are offered are also subject to oversight, and you've heard that from the department reps in the past. Very important nowadays also in terms of the underwriting process, what kinds of information can be utilized, other tools that might be useful in the future, all that subject to review and consideration by the regulatory bodies as well. Oversight of agents, unfair trade practices, and the fact that regulators can do market conduct evaluations if they are concerned about certain practices in some cases. Adjusters, reinsurance, I'd called out before, entry and exit from markets, the residual markets, you heard something about that from Steve Manders as well. Guarantee funds, and then the issue of insurance fraud and abuse. which again, I caution everybody when I say this. One of my earliest research streams was on insurance fraud. And when I talk about it in my class, I have to quickly emphasize to my students not how to do it, but what some of the problems are associated with it. Okay. And I really do have a lot of respect for some of the activities that the Georgia Department has been investing in and undertaking. And certainly individual carriers have been very involved in that activity too, I can assure you. So I think that's a very important one to know, that even though it is subject of regulatory oversight, it is also a very critical point of reference for benefits in the marketplace. Okay, so last but not least, as I had two final slides, and the first one just sets it up very quickly. I did want to leave you with what I had mentioned early on. I've shared with legislative audiences in a number of different forums in the past, and that is to encourage you as legislators especially, but all of us in thinking about issues in this space and how it might impact on us, is to think about the sorts of things that come through in legislative, regulatory kinds of contexts that don't always say anything about insurance, but that are critically important given some of the dynamics here. Remember, if it impacts on frequency or it impacts on severity or both, then you can expect in the long run that's going to have a pressure on the cost of insurance or premiums. Okay. So what can we do from a loss prevention and mitigation perspective? How about safety and wellness, negligence and liability, intentional acts, criminal acts, fraud, those things that we were just touching on. And so my final slide, and this I'm certain is not exhaustive, but just to give a few thoughts for you to reflect on as you finish up your business on this committee, but also as you continue your service as legislators, is so many things are either directly or indirectly impacted by what goes on in terms of regulation and legislation in our states. Some of it goes down to the local level, but certainly these are still mechanisms. The fire protection piece, very critical. A lot of areas have gotten into very big challenges of late. We're fortunately not seeing as much of it here yet, but the quality of those local fire departments, fire protection support and standards, the zoning and building you've heard about from a risk protection perspective, highway safety, our cell phone use laws in Georgia are, I think, very appropriate. In fact, I get scared when I go to many other states and I can see the person that's driving slow and maybe not maintaining their lane, and I pass them and it's just about guaranteed that they're on their cell phone. But I'm thinking, well, we would arrest you in Georgia if you were doing that. But that's not true in all the other states. So I think we have some very important elements of evidence that the legislature has enacted at various points in the past that help us a lot. Workplace safety, obviously, as we look at some other lines of business, educating, which you're obviously doing as part of the committee's work here as well, but a number of other areas that really don't say insurance. They're not insurance laws, right? But they're impacting on frequency and or severity. And ultimately, if we want to fix any particular challenges on the insurance side, addressing those loss costs is going to be critical. Okay, so thank you for listening to me, and I'll pause for a minute in case there's any questions, Chairman.
And Dr. Hoyt, we do have some questions. Let's start with Zoom. We've got Majority Whip James Burchett from Waycross on Zoom. And committee members, as you ask questions, introduce yourself on that. And I'd like to thank Justin Speck for getting this AV set up today, as well as Betsy Theroux from House Media with getting the word out on this committee the last 4 meetings. So Whip Burchett, when you connect by Zoom, we know you've got a question for Dr. Hoyt.
Thank you, Mr. Chairman. Can you hear me?
Yes, sir.
All right, very good. Thank you, Dr. Hoyt, for this informative slideshow. I noticed on one of the early slides, we talked about the underwriting profits being at somewhere around -8% is what I recall. But do you have any data as to the overall profitability of the insurance companies, not just the underwriting? And do you have any predictions or data associated with the market growth and how the overall profits have been increasing or decreasing in a state?
Okay. So I think you're referring to, and I'll pause after I say this to double check. I think you're referring to the idea that there's also revenues that come from investments for insurers. So there's an overall rate return that is achieved. Can I double check that that's sort of where you're thinking?
Yes, sir. Yes, sir. Exactly.
Okay. Okay. So important point is that investment returns are part of the rate filing process. They get involved in that process through a company's decision about what their required rate of return is when they file with the department. So those can be reviewed, those assumptions, but they're doing that on an average rate of return. So if the stock market, just like my own 401k, in my case 403b, if the value goes up one day, I kind of got used to not celebrating too much because it can go back down the other way as well. As I mentioned, conservative returns are pretty consistent for the insurer, and those are factored in. So ultimately, there is a factoring in of the investment component. To your point, yes, there certainly have been situations where, because of increases in overall investment returns, profitability for the insurers do go up. But over time, ultimately, that would be part of the rate review and justification process there. To answer your very specific question, investment returns, I think most of us know that those have been somewhat stronger here in recent period. But again, insurers tend to be long-term investors. Part of that is regulatory required. But I think it's also business prudence given the nature of the business. So I don't have right at my fingertips some profit numbers to mention to you that way, but that would be the way you would look at that.
Thank you, Doctor.
Thank you.
Can you give us, I was looking at a paper here that it looks like you and Dr. Brown and Dr. Marius wrote in
Grace, yeah.
2022. Generally, can you tell us like what the trend is for profitability for insurance in the state of Georgia? With overall profitability, not just underwriting profitability.
Okay. So I appreciate the call out. The paper he's referring to is published in the North American Actuarial Journal. So I give prompts for maybe he's our second reader of that. No, but thank you very much. I think a very fair question. I actually double checked this before I came today. We don't see byline data updated yet for the industry on a state-by-state basis. So I can't really answer that right now. I will tell you overall in the industry, because you did sort of ask it that way, and that was the level that we focused on in that paper. There has been some improvement in overall profitability for the insurance market generally. So I think that is leading to some potential softening in rates and availability. So hopefully we'll see some of the signs of that in Georgia, but the actual numbers, I really couldn't tell you at this point.
Thank you, Doctor. And
okay, thank you.
One last follow-up, if you would. I'm not a lawyer. I'm not in the insurance. I mean, I'm not an insurance agent. I'm a lawyer, and I'm just broadly speaking, if a company's losing on a line, and they continue to do business. Let's say they're losing at 8%. Is it the model of these underwriting insurance agencies that they utilize the premiums for investments? And then I asked the insurance commissioner this early on, if they didn't have those premiums to invest, where would they get the capital to invest?
So the capital is coming from profits over time. So capital is, if the company's been in existence for a period of time, capital is coming first from investors, or in the case of mutual insurance companies, from accumulated capital from profits over time. So that capital is accumulating. To your question about if they're not returning a positive return and it's not offset by overall expectations around investment returns, then you would expect to see pressures in terms of declining writing in that line of business. Okay, potentially to the extreme, and I hate to point to California, but they're one example where you actually have seen companies say, we just can't do business in the state anymore. So yes, ultimately we would expect that pressure to build to a point where an insurer can't justify deploying their capital to a particular state or to particular lines of business. Okay.
Yes, sir. Thank you very much.
Okay.
This was
No.
very informative.
Very good. Thank you.
Thank you, Whit Burchett. I believe Floor Leader Hong has a question.
Thank you, Mr. Chairman. I'm Sue Hong. I represent House District 103 here in Gwinnett County, so it's good to be home. You had a slide about the number of insurers here in Georgia. I believe there's 400 personal, home, and auto, 500 commercial. Where did you get that information?
I did note that there, but you can find that in the presentation from Steve Manders from the OCI.
Okay.
In the November, I think he came in November. That's my recollection. But at any rate, he presented that. So
Okay.
that information came at that point in time.
And maybe it was in his presentation as well, but do you know how many insurers have left Georgia since maybe a year or 2 years?
He did quote a number in there. I don't want to say what it was exactly because I don't recall, but he did include that there if you're
Okay.
looking for that information. I would just quickly add to that point, and I was alluding to this, because this is a big state and it is one that insurers by and large would like to do business. It's important to also know that they may be hoping for a better environment and not necessarily withdraw from the state, but cut back in certain areas in terms of availability of coverage that they're willing to deploy capital to. So that was not captured in his information, but yes, the number you're asking about was in his slide.
And one more thing, one of your slides also indicated an average business liability claim cost increasing due to medical costs and litigation. Has anybody looked into the kind of the trend of medical costs going up compared to the verdicts that are coming out? So as far as the more that the medical costs are increasing, so it's costing more for, or showing that any type of personal injury claims are obviously higher because the medical costs are higher. And so therefore verdicts or settlements are higher. So that kind of relationship between those two.
You should be one of my research assistants. Probably not a job you desire, but yeah, I'm sure we can. But all kidding aside, I think it would be a really interesting study. In fact, you just prompted me.
Mhm.
I'm not aware that anybody's necessarily looked at directly medical and the impact on the litigation component within claims. I think what I can tell you is the big concern is that, as some of us may know, medical costs had kind of stabilized around the pandemic. And that trend is unfortunately not very good now from a cost impact perspective. So I think this is absolutely one, not necessarily just a Georgia issue, but broadly, medical costs are going up. And to the core of your question, I think it would be a reasonable evaluation to make, because medical costs typically in litigated claims kind of form that benchmark for then how much might be the non-economic damage of pain and suffering and some of those things. So that's certainly a mechanism, but I don't know of any actual studies there.
Thank you, Professor.
Okay.
Thank you.
Thank you.
Thank you. Chairman Joseph Gullett.
Thank you, Professor. Joseph Gullett from House District 19 out in Paulding County. So draw a line through the middle of Atlanta, flip it over. I'm right
Okay.
there, but I grew up right down the street. A couple questions. One, I think I saw a slide said we're the 50th out of 51 states, including DC, least profitable for insurance companies. I read that right?
That's reporting in that year in
Okay.
2024. Yeah.
And I'm thankful that insurance companies are cutting rates, but I'm trying to understand why they're cutting rates. If we're the 50th least profitable one. So again, I'm glad. Please continue to cut rates. This is a very important.
Yeah. My answer would be the number I reported to you is overall profit levels within Georgia and all overall insurance profit levels in the US. Ultimately, I think what that can mask is that rate decreases might be appropriate in certain lines of business and may not be appropriate in other lines of business. And I can't speak to the specific rate adjustments that were being reported about from the Department of Insurance today. But ultimately, I think that's really likely to be the answer, because if you remember, you would be forgiven for not seeing all the numbers on there. But if you remember the chart by line of business in Georgia, there are profitable lines of business. Okay. There's also ones that have been very unprofitable, right? So ultimately, expectations going forward in auto and in some other areas could be positive in terms of impacting that. But the overall number is highlighting kind of what it would be across all lines of
Okay.
insurance.
I have
Okay.
a different line of questioning, but it's
Okay.
related to defense costs containment. And so how does Georgia stack up, if you know, either just in the US as a whole? So we know we're the 50th out of 51, least profitable, but defense cost containment, where do we line up either across the nation or even the Southeast for their neighbors?
Yeah, I honestly, right offhand, do not know what those comparators would be. I do not know.
Do you know, would you know if we're like close, if we're not close? No.
I just do not know. That may be a good question for the department.
Sure.
Yeah, sorry, I can't help on
Thank
that.
you.
Yep.
Representative Donahue.
Thank you, Mr. Chairman. Representative Emery Donahue, District 31. And thank you for being here. The question was from Representative Sue Hung, how many companies have left? And it was 34% and 34.5% from commercial. With that, the answer was, pretty much, that was simple. How many companies came back into Georgia? And it was said 17%. Actually, it's about 18.8. So that was close. So we are not looking at how many companies that start up and go out of business because they're managed poorly. And that's something I've not heard anybody talk about. And I would like to know that eventually. This is our last meeting. But again, I do thank you, but a lot of times it's bad investment, overspending, just not good management of their own money.
You're referring to the departing companies.
Yes.
There can be a number of reasons behind those. That's absolutely right. And that's why I also emphasize that I think it's also important to look at individual companies haven't necessarily left, but do they have the same allocation of capital to the state for various lines that we would need help with? Yeah. So, but fair point.
Thank you.
Thank you.
Questions for Dr. Hoyt? All right, if no further questions, thank you so much for coming. I'm going to call Mike Royal up as our next speaker. And while Mr. Royal and I are going up there, I'd like to start down here next to Representative Donahue, and representatives, just introduce yourself going down. You got introduced, but
Hey everyone, I'm Representative Michelle Au, representing House District 50, which is right nearby, a little bit of Alpharetta. Pleased to be here.
no, go ahead. You're ex officio today.
Representative Viola Davidson. I serve House District 87 primarily in Stone Mountain, Tucker, and Pine Lake.
I'm Representative Carolyn Hughley, and I represent the heart of Columbus.
I'm Al Williams. I represent District 168, which is Liberty County, right on the Atlantic Ocean where the water tastes like cherry wine.
I'm Representative Karen Mathiak, District 82, which is Spalding and Fayette counties.
I'm Sue Hong. I represent House District 103, just north of here in Gwinnett County, as well as South Hall counties.
Yep, Joseph, I'll go again too. Joseph Gullett, District 19, Paulding County and West Cobb County.
Jacqueline Ford, and I represent District 170. That's Berrien, Cook, and Tift counties.
I'm Chuck F. Straish, and I represent District 104. That's Mulberry here in Gwinnett, Auburn, and Carl in Barrow County. Thank you.
Thank you, Majority Leader. And I see you're an honoree. They've got something up on the chamber board. So appreciate your leadership here in the community. We've got a couple folks on Zoom.
James Burchett, I represent District 176, which is Atkinson, Ware, Coffee, Lanier, and Lowndes.
Noel Williams, House District 148. I represent Chris Pulaski, portion of Houston, Wilcox, and portion of Ben Hill.
All right. And Chairman Bruce Williamson was on earlier. A good number of people came in since this got announced, so I want to repeat it. The insurance department announced a few weeks ago that State Farm cut their rates by about $400 million a year. Last week, they announced Liberty Mutual. They announced Southern General, Progressive, and Go Auto reduced their rates. So that's a total, and I believe more are on the way. So just want to get that repeated, and want to thank you all for coming. We're going down our list of witnesses, and the insurance agents have come to every one of these meetings. We got one right here, Mike Royal. Thanks, Mike.
Thank you, Mr. Chairman. Thank you, Dr. Hoyt. You teed me up perfectly. I was sitting there making notes, and I'm altering my remarks to you. And Chairman Reeves, thank you for having me. I'm Mike Royal. I know many of you in the room. I'm used to speaking to you about educational issues a lot. My former life was almost 14 years on the State Board of Education, but insurance is my day job. That was my non-paying job. But also, though, I am a board member of the Independent Agents, and then also I serve on the 8th largest insurance group of insurance professional agencies, Secure Risk, and I am chairman of the Carrier Relations Committee on it. So I see this and what's going on a day-to-day basis. And I thought today, instead of having a slide deck, and I'm glad I didn't because it would have looked a lot like Dr. Hoyt's, I just really talked to you about what I'm seeing. I've been in insurance 30 years. This is my 30th year. I started at Jim Anderson and Company right off the courthouse square in Lawrenceville, right out of college. And I own Partners Real Services, started it. We're one of the largest independent insurance agencies in Georgia now. And we have about 4,000 clients. I asked my controller yesterday. We're just under 4,000. It's 4,000 of your neighbors. That's personal line. We do commercial, I'll call it medium, small to medium business, and personal lines. These are the people you're beside. They're your neighbors. They're in carpool. They're the companies that are coming to your house to work on your HVAC. They're spraying your lawns. They're working day to day to work contractors, restaurants, outdoor venues. That's who we represent and who I've worked with for 30 years. And so the last few years has honestly been the most difficult of my career. Dr. Hoyt mentioned hard market. It's been hard plus some. We have ebbs and flows in the insurance marketplace, but this one has really been the hardest. And it's been difficult because of the lack of choices and competition in the market. This is a kitchen table issue. We get that. And I applaud what the committee is trying to do on this. It's going to be hard, but what we're trying to do. I also see this as a father. I have 3 daughters. I've had a fleet of automobiles. Last week, my middle daughter calls me, said, Dad, she traded in her Edge and got an Expedition. And she said, oh my God, is this right? Can this be right? And I'm her agent, by the way, too. So I was like, sweetie, it is. It is. You've got a big vehicle now. You're not in a little vehicle. It's a big vehicle. But this is a kitchen table issue that has been affecting people and is going to continue to affect people. And we have seen good carriers leave. That's been a question. We have. I mean, there's 2 that I really hated to leave that I did business with, that I really liked, that I saw that did right by customers, who wanted to pay their claims on time, who did well. Donegal, Central Mutual. It's a mutual company where the policyholders own the company. What have they done? They've taken their capital elsewhere. And talking, like I say, I've worked with a lot of carriers, not just through the board, but we're doing our planning sessions right now with carriers, doing our goals for next year. Last year, I had one of them, a head of tort reform, say, Mike, I'm sitting here, and if we're an insurance company and we have 50, if we're a restaurant and we have a franchisor and we have 50, and 2 or 3 are not making money, they're continuously losing money, and we see no help on the horizon, what are we going to do? We're going to shut them down or pull back. They have taken their capital elsewhere. And Representative Hong, you asked a question about insurance companies coming in and out of the market. And here's what we don't see and can't get really reflected in the numbers. And these are the conversations I'm having with carriers. What you don't see and reflected in those numbers is the amount that have turned off the faucet. They want to do business in Georgia. Traditionally, they've made money in Georgia. They have a great agency plant in Georgia, but they're not making money. They are reducing capital. I wasn't expecting to get this granular, but your questions have been great, and I will, because I've had these conversations with if I said this carrier's name, every one of you would know this carrier, who sat in my office in my conference room and said, Mike, we're reducing capacity in Georgia. They would write umbrellas up to $10 million easily on an account. Why is that significant? If you're working for the city of Atlanta, you're doing work at the airport, you're doing work on any Georgia Power project, you're probably going to be required to have a $20 million limit of liability in excess, your primary plus your excess. There's a lot of job sites that are going to require a $5 million. This carrier was one of our top carriers writing that. They said, Mike, we are not going to write any umbrella in Georgia over $5 million. And they were writing 20. Several have come in and said, we're not going to write any umbrella more than $3 million. We're having to stack umbrella now for our large clients. I just got finished with a renewal December 1st with a significant, everybody in here would know their name. They're doing those projects. We had to use 3 umbrella underwriters to get to their stack to get it, because no one wanted to put that much capacity and capital on the line because they're worried about nuclear verdicts. They're worried about how much are they going to get dinged for? And the umbrella and excess market is still probably, I'm going to get in some good news here in a second, but you say I'm bouncing around a little bit because of your questions. The umbrella market is still very fluid. It's tough because it gets hit last by the big verdicts, because the trail, they've got to develop is the key word we use. Our lingo is develop. That's i.e. a claim. You get a claim in, you start doing the research, you start doing deposition, you see it's going to grow and grow and grow, and they make reserves they put reserves, they put up numbers that they estimate that it's going to cost. And then, oh crap, we're about to get out of our million. We've got to put the umbrella carrier on notice. So their development is later than everybody else. And then the market on that has started to change some, and that's good. And it is, but I got some bad news today, looking at a 1/1 renewal, and the umbrella was still going up. The auto on this account went down this year. We have a decrease in the automobile liability premium for this insured this year. Their umbrella went up. And I was talking to the underwriter. I called him and said, he goes, our reinsurance treaty just came in. A lot of reinsurance is heavily involved in umbrella and excess and high layers. He said, we got our reinsurance treaty. It went way up. So those treaties are usually 1/1, 12/31, 1/1, they're end of the year. And that's not good because it takes longer for those to develop. And that'll be, as we continue to progress, like I said, I'm about to get into some good news. As the market changes and continues to progress, umbrella will probably be one of the lagging ones behind because of how claims develop and go. Dr. Hoyt showed the slide and it was asked Georgia 50th out of 51. When I went on to the State Board of Education, we always had a motto, thank God for Alabama, because we were at the bottom. And it was like, thank God for Alabama and Mississippi. And now, thank you, we're doing really well. We're doing a lot better. It was 85% graduation rate this year. But right now in insurance, thank God for Louisiana. That's what we say. Thank God for Louisiana. They're so backwards and can't get their common law, whatever law they're doing right now, right, and they can't figure it out. But thank God, because when you have 144% loss ratio in homeowners, that line of coverage Dr. Hoyt mentioned, there are very profitable lines. Right now, we are delivering decreases in management liability premiums. What's that? Your directors and officers liability, your employment practices liability insurance, those type of coverage, your fiduciary coverages, those, the management liability lines, they're very profitable. And we are delivering decreases in premiums on those lines. But when you've got a homeowner's personal auto and commercial auto at the rates we're going, you can't sustain it. The cost of the claim, the cost of litigation, he mentioned, Dr. Hoyt mentioned on his slide, the updated, I was glad to see that because I see it. I didn't know what it was. I can say 40% of the cost of claims now are in litigation. And hopefully with the tort reform, and I think it is, that's going to start going down. But again, positive news. I saw an email yesterday morning. I opened it and I'm going through and catching it up. And what to my wondering eyes should appear, it was a Christmas gift. I had the first marketing email from an insurance carrier I've seen in years saying, we want to write convenience stores. I sent it out to my entire office. The premises liability for that, and that's a huge portion of tort reform, the premises liability, that particular segment of hotels, convenience stores, restaurants, taverns, bars has been brutal. This isn't what I'm reading about in books. This is what I'm seeing in our customers. I had for the first time in my career last year, not being able to get someone insurance, no matter what it costs on premises liability. We could not get it. No one would offer assault and battery coverage. And as I know, that's the portion of the insurance policy coverage that if someone is assaulted, i.e. shot in your parking lot, CVS and the cases we've all heard of, that's where it is, assault and battery. That is a huge issue. We have carriers that will offer coverage, premises liability, but exclude assault and battery. So Representative Hong, that's what you don't see, and it's hard to quantify that the capacity is there for that. But so if somebody trips and falls, they're good. But if they're robbed or they're assaulted, no coverage. That is a huge, huge, huge issue. And we're starting to see, like I say, saw it yesterday. Send us your convenience stores. We want them. So that was very positive. I also, personal auto. I won't go over all of it, but sitting in, like I say, I'm meeting with carriers right now. Commercial auto is different than personal auto. Personal auto, people always sometimes will ask me, Mike, what do I get if if I put cameras in my vehicle or I do this? Personal auto is much more segmented and you get specific file discounts for doing something. Student drive, good student, airbag discount. passive restraint, those discounts, line item, line item, line item. Commercial auto is profitability. It is profitability driven. And the ones that are having the lowest rates are doing the things. I almost felt like, Dr. Wood, I was in my risk management class again. Can you avoid it, transfer it, all the different things you could do? I would have gotten all 4 of those right, but all the things you can do. So the fleets that are out there, the fleets, I don't mind saying they wouldn't mind because they're doing a great job. Shoemate is one of our clients. Tons of vans right up the street. They are taking proactive measures. They have put cameras in their vehicles. They're doing everything they can. They're like, how can we become better, safer, and do better? They are getting excellent rates with an excellent carrier because they're doing that. But commercial insurance is written in bands. I don't want to get, like I say, too technical, but you've asked some pretty technical questions, and this is the discussions we have with our insurers. They'll file a rate with the state, and they'll file a 40% band on commercial up or down. So if you've got a $1 rate, it might be 60 cents. It might be $1.40. They've got a lot of flexibility because it's very subjective. Because what they're doing, and getting to your question, Mr. Chairman, why are rates going down if we're still 50th? Expected loss ratio. Because some of them are thinking, and with the tort reform that was what happened, their expected loss ratios are going to start to flatten or go down because they're able to have a more level playing field against that 40% claims, 40% litigation expense, that they're going to be unfair. As Dr. Hoyt will tell you, one of the first things you learn in Insurance 101 is indemnification, and the concept of getting what you're owed, getting back to normal. And that's where insurance should be. And in my opinion, the pendulum on that had swung way too far to one side. Can it go back too far to the other? Absolutely. I've seen it. I represent an administration. I've been in politics and campaigns and stuff for a long time. We've seen pendulums go left, right, where's the center? In my opinion, as like I say, someone who has 4,000 clients and sees claims on a daily basis, the pendulum had gone too far to one side, and it needs to come back into the middle and settle there somewhere. And what I would ask and please encourage is let what you did last year work. It's taken it took about 3 years to see significant differences in Florida in their tort reform. And I was looking it up while we were sitting there. I looked up what the average is ChatGPT, so it may not be exactly, I'm going to put my quote on it, but it said last year was average 6.5% rate decrease in personal auto in Florida. And those are numbers I don't think anybody in this room would be sad about on a year after year, year over year basis. Because I had another carrier, a carrier most of you would know, I met with last week, and who was in town for one of our big conventions. And they are still being very, very, very strict and holding the line on their umbrella on what they will write, what they won't write. They've reduced capacity in Georgia. And I said, are you about to open up? He goes, Mike, we're about to have another legislative session. I want to see if this sticks. We're not ready. What he told me, we're not ready yet to adjust our expected loss ratio because we know the ink is barely dry on this. And is it going to change? We're not going to bring our capacity and our capital quite back to Georgia yet. We want to watch this bake and make sure it does. So that's where we're at. Chairman Reeves, it's a lot. It's very hard. This isn't a one size fits all because you saw the slide with profitability in some and not in others. Basically I'm just reiterating and summarizing. Basically what carriers have come in, the ones that are still in Georgia, the ones that haven't left, the ones that haven't pulled out, they're cherry picking the lines they want to write. They're cherry picking the classes of businesses they want to write. They're cherry picking, and I don't want to use the line, but it's reality. They're cherry picking where they will write certain classes of business and won't write certain classes of business. Try to get a hotel premises liability inside the perimeter versus in Cumming or Dawsonville. It's going to be a lot easier. It is. That's the reality of it. That's what's happening. So what we're doing is working. We're starting to see, I think we're seeing results faster than Florida has, personally. and doing. We're starting to see what works. And it was addressed by the insurance commissioner's office and by Hoyt. I think fraud is way under, I don't want to say valued. The percentage of fraud that's in that number, I see it. I see it. I don't know the magic bullet to fix it, but it's there. But so really my ask of you and my request in just 30 years and the experience that I have, let it work. It's going to take a minute, but it's progressing, it's happening. And I'll be glad to answer any question any of you have. You say, this is what I do. And if you have it, because this is kitchen table stuff. When a family has to sit there and say, our insurance just went up, our food bill went up, our gas bill went up, everything's going up. That's a bottom right-hand column number on that spreadsheet. And they have to make choices of what not to do or what they're not going to do because of it. And I applaud the committee in trying to address that.
Thank you, Mr. Royal. Any questions? Thanks for your testimony. You gave the magic word, and that's insurance fraud. So that's a good segue to our next speaker or speakers. John Melvin and Mike Carlson, come on up. You know, I'm proud to represent 60,000 VIPs in my House district. One of those VIPs is our district attorney here in Gwinnett County, who could not be here today, but sent two very sharp prosecutors to shed some light on insurance fraud. So tell us about insurance fraud prosecutions. And John used to be GBI in addition to several other circuits, and we're proud to have him back here in Gwinnett. And yes, this is Carlson on evidence right here.
It's good to see everybody. Good to see you, leader. What I did when Mr. Reeves contacted our office about insurance fraud is I went back. Now, Gwinnett County surpassed 1 million people, so I was interested in the number of cases that came to us under 3319. These are the numbers. 2021, 5 referrals. 2022, 8 referrals. 2023, 12. And then last year, 8. Now, I've been doing this for 30 years, except for the 4-year stint as assistant director of the Georgia Bureau of Investigations. Those numbers are very low when it comes to insurance fraud. Now, sometimes it'll take a species, like it'll be coming to us as a RICO Act. But even that, I'm telling you that the numbers are very low. And it's not because the insurance office is not doing its job. Chairman King and Commissioner King, since he's been in office, the quality of cases that we're getting are wonderful cases. And the 3319 is a felony for those of y'all that are not familiar with it. It provides 2 to 10 for anybody that commits insurance fraud within the state of Georgia. You have a wonderful venue provision. As a legislative body, y'all have given us a phenomenal tool. My purpose in being here today is to tell you that we need more referrals. The district attorney's office is open for business when it comes to fraud. The professor spoke to risk being a function of frequency versus severity. When we're seeing the severity, what I'm talking to you about is the frequency that we know is going on is not being referred over to us as much as it should. The statute provides that these cases can be handled by the Attorney General's office or by the local district attorney. And I encourage y'all to spread the word that we are out here for y'all. If anybody, any agency, any company, any organization needs a district attorney to come out there and speak to insurance fraud, speak to the white collar aspects, speak to how we put those cases together, we are open for business. Just real quickly, and then Mike, if you have anything to say, the way this will get started is generally we'll get a referral from the insurance commissioner's office. We'll open it up, but we can also get referrals from a local agent as well. Any business can refer it to us under 33118. We'll open up the file. We'll be able to look at it. These white collar cases, I've been doing it for 30 years. They're open and shut cases. By the time it gets to our office, they've given us enough rope so that we can tie them up and we can take them down. As a matter of fact, your laws are so well written that in the past 30 years, there's been only 6 reported appellate decisions involving insurance fraud because we got them by the time we get the case. So if y'all can get them to us, once it gets to the district attorney's office, we'll build the case, we'll draft the indictment. The primary goal when it comes to insurance fraud is restitution to the company and to the victim. In our office, with Mr. Carlson, we put together a complex litigation unit. Not only are we demanding it as part of restitution, we're also filing FIFAs against the criminals so that judgment will stick with them, even if it outlasts the probation. That's what I have to say, and I just want to encourage y'all. We are open for business. Thank y'all for what y'all have done for us. Mike, do you have anything?
Just very briefly to underscore what Chief Assistant District Attorney Melvin just said. And again, my name's Mike Carlson. I'm the Executive Assistant District Attorney here in Gwinnett County in the Gwinnett Judicial Circuit. This is an outstandingly written statute for its purpose from all we can see. Again, just because there might be a low number of those appellate decisions doesn't necessarily mean the statute's not being used. Could very well mean the defendants are pleading guilty, the matters are being taken care of otherwise. But it's a very, very flexible statute. It's allowed for the use of to be tied in with other important criminal statutes. We did see in at least one of the appellate decisions that was used in conjunction with the state RICO statutes. We also saw that in terms of other evidence rules, bringing in evidence, 404B, which allows in the uncharged misconduct of a defendant, other matters for motive to be brought in. So the statute was used for that. In addition, when we have someone who might be an habitual defender, even if the case is not made or results in a conviction, other acts of dishonesty can be used to impeach a defendant. And we just had a case come down from our Supreme Court recently where although it was not technically a criminal conviction, the acts of, in that case, employment insurance fraud were successfully used to cross-examine the defendant, and that was upheld by our Supreme Court. So again, the great work we've heard about here, drafting a statute like this, is certainly to the benefit of the state. And again, to Madam District Attorneys and Chief Assistant Melvin's point, we're ready to coordinate and use it and move forward when those cases are brought to us.
You do have some questions, Majority Leader Chuck Ebstration.
Yes, sir.
Thank you, Mr. Chairman. Well, first, John, Mike, great to see you. Thank you for the work you've done throughout your career, and thank you for the work you're doing now to keep us safe here in Gwinnett County. My question really is, I guess, in two parts. It's because the statute's written as it is, where, as you outlined, John, I wasn't aware that the Attorney General or District Attorney can prosecute these offenses. Is there an issue at all as far as how these reports are initially being made, if that's maybe being, or victims maybe aren't equipped to make those reports on the front end? Second part of my question is, are there situations, maybe not here, but maybe prosecutors in parts of the state, they're overwhelmed with violent crimes. They have other offenses that they have to prosecute. And these types of offenses, because they may require a degree of perceived specialty to prosecute it, or just due to the caseload that they don't have the ability to take those on. What I'm really getting at here is, if the statute's written so well, we have the Attorney General or district attorneys that can prosecute these, what more can be done to address this issue of fraud, which the insurance commissioner also brought up to us at one of these earlier meetings?
That's a multifaceted question, brings some great points. And let me talk to you real quick about the problem I've seen in 30 years and I still face today as a prosecutor. And that's the ubiquitous pushback against white collar cases among our brethren in law enforcement and prosecution offices, because it's such a specialized area of white collar prosecution. When you're talking about Title 33, I would venture to say that 99% of my brethren in prosecution are not aware of Title 33. So it's something that needs to be addressed at the training sessions of the Prosecuting Attorneys Council to make us aware, because once you look at the statute, I got to be honest with you, I looked at it and I'm like, oh yeah, that's there. And I'm one of the more aggressive white collar prosecutors. So it needs to be addressed in training among the prosecutors. It needs to be addressed in training among our law enforcement, because the Office of Insurance Commissioner does have their own investigators, but they're overwhelmed just like we are. And this county alone will have over 6,000 felony cases for only 50 prosecutors, and any given attorney has a caseload of about 300. Murders have to take priority. The violent crimes have to take priority. So the white collar crimes like insurance fraud and various thefts are kind of set aside. And the bigger the box, the much more need there is for specialty. So if we have a one and done on insurance fraud, that's different than the repeat insurance fraud that we see. For example, some of the term ambulance chasers, where you got people out, frequency and severity, it might be low severity, but the frequency of ambulance chasers is killing your industry. But if we can get that case built, we can bring a RICO, we can use the insurance fraud statutes, we can go after them and chop up that snake too. So you spoke about training, leader, and you spoke about specialties. I think one of the other issues that you spoke about was the victim's ability. And we can take cases, any general felony case, whether it's referred to us by the insurance commissioner or whether it's referred to us by a victim as well. I do know that handling phone calls just off the street, a lot of times the victims are kind of misguided about what constitutes insurance fraud. They're upset about the rates, as opposed to, I just got ripped off by this contractor who claimed he was going to fix my roof and filed with the insurance. But if you want to let the victims or have insurance companies let the victims know so that we can get that, triage it, send it to the right people, or handle it ourselves, we're happy to do that, sir. I hope I answered your question. Yes, sir.
And if I may add one matter, and thank you so much, and great to see you again today. There is a very, very broad venue provision in our insurance fraud statute, which would allow for, again, prosecution at least at different levels or different locations for the same act of fraud or series of acts of fraud. It's basically any county that where an act in furtherance of occurred. So it's similar to our racketeering statutes in that regard. And again, provides for perhaps if not statutory changes in terms of the law, but examining other or more enhanced ways to approach investigation and prosecution.
And I know I have some questions from members on my right, any on the left over here. Leader Hughley.
Thank you. Thank you, Mr. Chairman, and thank you all for being here. In the old days, fraud was like staging accidents.
Yes, ma'am.
Now, what are you seeing in terms, as we look at technology and things that are happening with all sorts of things, but it's no longer finding the guy that's making you have an accident. What are you looking at now?
Arson, arson, fraudulent claims, but the accidents, the fraudulent accidents are actually still there too, as well as just the complete forgeries of individuals and title fraud too. So I mean, crime is as only limited as the creative ability of the criminal, and unfortunately, they're. But we're so blessed in Georgia. Let me tell you, our theft statute says, regardless of the manner in which it's appropriated, stolen property, and our Supreme Court has said that encompasses even yet unthought of ways to commit crime. So I want to thank y'all for putting that in there. But we're seeing the entire spectrum. But the frequency and the severity, it's the ambulance chasers that are really killing us. Are really killing y'all.
And by that, you're meaning the runners who
Yes, sir.
were breaking the law.
Yes.
Yeah.
And we have state bar rules. Like there was a lawsuit that Court of Appeals kicked out of, I think it was the Lazenby law firm. And what was discussed in that was really unethical, but not necessarily some of the criminal laws that surrounding it. I'm reading it thinking, well, we could go after them criminally. If we, I remember right before I left DeKalb to go to Cobb to be the chief out there, there were actually runners in the DeKalb County Police Department in the waiting room contacting and giving cards to people that were going there to get their accident reports in the police department lobby and in their parking lot. And that was 15 years ago. It's still going on. So anyway, we could tighten that up just a little.
Thank you. Floor Leader Hong. Chairman Gullett.
Thank you for what you do.
Sir.
I think at our first meeting that we had for this committee, Commissioner King came in and he said one of the things that this committee needs to address is prosecutors not prosecuting fraud. I mean, I think that was I'm close to being a direct quote
It's a
on that.
criticism
And
sometimes.
so if I do the math, you got 1 million people here, 11 million in Georgia. Over 4 years, you had 30 cases or 30 referrals of fraud, maybe.
Right.
So 330 cases per year, and that's just an estimate over the last 4 years. Potentially, if it's, I think Gwinnett's a pretty good segment of the population.
We're a fair
Um,
cross-section.
And so are the insurance fraud referral, like, so if this happens, what would be some reasons that you wouldn't prosecute besides it not being a good case? Could it, yeah, what would be some reasons that you wouldn't prosecute besides it not being a good case?
Not being a good case is the only reason that our office wouldn't prosecute. But let me say something, Chairman Gullett, because even though it might not come as insurance fraud, if it's an average road officer, I can guarantee you they don't know Title 33, they know Title 16, so it might come to us as a theft case.
Okay.
But our case management system doesn't differentiate those theft cases that are based on insurance versus those that are based on Title 33. So I'm sure that at 1 million people and over 6,000 cases a year, that 4-year period, we had 24 to 25,000 cases, but only 30 cases that were referred as insurance fraud. If it's a good insurance fraud case, it's going to be prosecuted, but it might not be held. It might not have the pressure or pardon me. It might not have the result that makes absolutely everybody happy, because it might be a probation case, even though they stole $10,000 just because of the nature of the sentence or something like that, because our primary goal is going to be restitution to the victims and the companies. If they are a repeat offender, that'll go into the decisional calculus. But in our office, the cases are going to be prosecuted. I can't answer for any other district.
That's fair. So I happen to appropriate money for the judiciary. And so I'm asking my fellow friends in the district attorney's offices, hey, why would you not prosecute fraud? I think the only answer I've gotten is sometimes maybe it's handed over in statute limit. By the time it gets to the district attorney's office, things have taken a while. Statute limitations is running out. But I haven't really gotten a good answer of why we're not prosecuting. I'm glad to hear that you are, but you're not getting many cases. And so I think we got to figure out where are we going wrong if we're not prosecuting cases, what we're hearing from one side, and we're hearing we've got 30 cases over 4 years. Something's not adding up somewhere.
The only cases that I've turned down that were referred to me from a state agency were from the elections office, and that's because they came to us at 3 years and 8 months. And the statute of limitations, 4 years. They didn't give us enough time to follow up on it.
Right.
The insurance commissioner, again, Commissioner King, since he's taken office, phenomenal. Cases well put together. And if it's under statute of limitations, we're gonna prosecute.
Thank you for your time. Thanks for what you do.
Yes, sir. And there is a difference between prosecuting well and prosecuting. We're going to prosecute, and Lord willing, with appropriate money and resources, we'll all come together and prosecute it well. Yes, sir.
Floor Leader Hong.
Thank you, Mr. Chairman. Thank you both for being here. I know the attorneys in the room, they know what a runner is, but can you tell us what you're talking about when you're talking about runners, and what the procedural would be, and how you can prosecute them criminally? I think even the attorney friends probably would want to know how, if you are referred a case like that, what that procedure would be.
Sure. So if I'm an attorney, I'm sitting in my practice, I'm trying to churn and burn just based on the volume of cases. I get homeless Joe to sit out in the parking lot of the police department, and when people go in there to file an accident report or get an accident report, they give them my card, which is in violation of the bar rules because I'm actually soliciting business. And hey, you contact here. What we saw in the investigation I was involved in, whereas once they do contact it, they're sent to specific doctors, they're sent to specific chiropractors, and then the demands are made against the insurance company. The reason that can be prosecuted is under our RICO statute. It is an act involving theft because the attorney is actively soliciting someone to make a false claim of an expanded injury, as opposed to, hey, I just got bumped. Well, now you got bumped, and all of a sudden you've got back pain, neck pain, thumb damage, and soft tissue injury. And so they're expanding claims. And you can look at some of the medical records and see that these claims are absolutely fraudulent. So that's how it would come under a RICO statute.
Have you
and insurance fraud.
have you prosecuted any of those cases or have seen any of those cases? Do you know if we've had any prosecutors in our state that have prosecuted that case?
When that case was being developed in Cobb County is when I transitioned over to Cobb County to work under District Attorney Reynolds. I did not follow up on that case. I have not heard if that case was continued on. It might have been continued on as theft. I do know that they started having prayer meetings with the people that were in their parking lot. I think that cut down on that a little bit. So, but to my knowledge, I have not heard about that. It's something we talk about as white collar prosecutors. My white collar prosecutor friends and I have talked about it, but we haven't taken any action against it.
Thank you.
Yes, ma'am.
Any other questions? Representative Mathiak.
Thank you, Mr. Chairman. And thank you, gentlemen, for being here because some of this is near and dear to my heart. But one of my police chiefs in one of my counties talked to us about elder abuse and fraud,
Yes, ma'am.
especially with Bitcoin and some of those investments. Are you seeing an uptick in that?
Yes,
And
ma'am.
what does that look like and what can we do to help in that?
Okay, so that touches on a couple of issues because elder financial abuse is the crime of the 21st century, according to the FBI. And here's the reason why. By 2030, 1 out of 5 Americans will be over the age of 65. By the year 2050, 90 million Americans will be over the age of 65. The elder population is the fastest growing population of our segment, and they control more than one of the statistics, like 78% of the wealth. The perpetrators are typically, I think it was 72% of the time, a family member that they don't want to report against. So that's what we see. Now, you spoke on something else. So you talk about crypto and DeFi. And that touches on what Leader Illustration's question was, is the special ability, the specialization of being able to go after those that are in crypto. The ability to do that is non-existent in a vast majority of the state of Georgia law enforcement community. You have to get into a much more specialized area. People that are familiar with FinCEN. FinCEN is the Financial Crimes Enforcement Network run by the United States government. If I suspect that you're guilty of money laundering or a host of crimes, I can send the information to them. They can run and tell me every bank account that you have. And then I can go get a search warrant, and then I can look at your money trail, and then I can follow up. But to be able to go through FinCEN, you have to have that knowledge. And I can tell you from having been a trainer in our community for 25 of my 30 years, there's just a handful of people that have that kind of knowledge. And Georgia is a field white unto harvest when it comes to white collar crime like that.
The detectives that we spoke with said exactly what you just said. They were struggling because they didn't know which way to turn next.
Yes, ma'am.
But what was happening is the elder person that they went after, they were cleaning out their bank accounts, their 401ks in the middle of the night. So that, I mean, big red flags, but
I have a friend that was vice president of a bank, and he fell for a romance scam. I mean, that's 78 years old, and some 26-year-old honey convinced him that he was the love of her life. He was the vice president of a bank. I mean, come on. I love you, Representative, but no 26-year-old girl's coming after you. You know. Yes, sir. I got the same problem.
All right.
thank you very much.
Representative Donahue.
Thank you, Mr. Chairman. Not even with cherry wine. Couple quick questions. I do thank y'all very much. I do appreciate you.
Yes.
Threw me for a loop here when you said you had one that was 3.8 years and you're not going to prosecute because you and I know it will not happen in 4 years, right?
Right.
Okay. What took them so long to come forth to ask?
That was on an elections issue.
Right.
It was several people that had voted twice. And even then, you're not necessarily able to do the investigation because, well, you can't bring a prosecution because you hadn't talked to them and you don't know whether they did it through ignorance or malfeasance.
Right.
But at 3.8 years, come on, the statute of limitations, 4 years. I am not sure the reason. I did ask the reason. I never got a reply.
Okay, and thank you. And the next follow-up to Chairman Mathiak, I have had probably 20 this year where people in fraud are calling up the seniors and senior citizens saying we can take your car and put more warranty on it. And they fall for it. And then they already have a 5-year warranty on the car they're driving. And then they pay $179 a month. And then I get involved. It's not my expertise, but after 6 months, they've lost this money. And then they fall for free everything. Free Elon Musk is giving away this and on. Do I come to you with these type issues and put that to you, or who would you recommend me to send it to where people's lost $300,000, $400,000? I'm kind of stuck on where to go there.
When you talk about that kind of money, it all go to the district attorney. And I mean, the biggest case of financial abuse was in Cobb County, and it was Jeff Carr, who was given the power of attorney by Mrs. Perkins. And for 14 months with that power of attorney, he stole $3.8 million from her. She owned half of East Cobb, but he's serving 20 years now, and he's going to be on probation another 20 years to pay her back. But these kinds of cases, when it's elder abuse, any form of elder abuse is a felony. It should go to the district attorney. And then, Lord willing, I hope you and the district attorney and all of them are getting out in the community and preaching the gospel of take care of your money.
Thank you. I am,
Yes, sir.
but there's one of me, and
Yes, sir.
I'm kind of stuck on where to take them to.
Yes, sir.
Thank you.
DA's office, sir. Yes, sir. Thank you, sir. Thank you for your time.
Appreciate you all coming and being open for business. Joe Mulholland in Southwest Georgia DA down there says he's open for business. We got 50 of them. So representatives and insurance industry folks, and everybody, talk to your DAs. And also the insurance department, they've got investigators. The investigators can tee up the cases and contact the DAs. So contact both the department and the DA. Some people asked about Chairman Eddie Lumsden. He has a grandchild graduating at Clemson today. So he hated to miss it, but has definitely been hands-on since our last meeting. Somebody asked, how long are we going to go today? And that's going to depend on the presentations and the questions. So definitely keep that in mind. Presenters, I would ask you to be succinct, give us handouts to follow up, and then questions. Definitely, we want to get all the questions answered, but we're trying to get this all presented and get everybody out today. So with that, let me call on Mark Mixer. Mark Mixer.
Mr. Chairman, waited for. I'm sure. I genuinely will say this to you in advance. I'm an introvert. I typically don't like standing in front of people and speaking, and yet I find myself in that capacity. But I'm going to represent 4 different viewpoints of where small employers find themselves today. And I've taken this on as a mission across the country in speaking with brokers, agents throughout the country. I'm a nationally recognized speaker with the National Association of Benefit Insurance Professionals. I wrote the 3-hour certification course on individual coverage, HRA. I'm a co-founder of the HRA Council, which is Congress's go-to advocacy entity, which is a not-for-profit education component of this new tool that's available to small employers, really employers of all sizes. But my background is actually that of an insurance company administrator. I'm the CEO of 2 insurance companies here in Georgia. We insure about 100,000 Georgians in the individual market. The individual market represents about 1.3 to 1.5 million Georgians. So that's representing about 9% of the state itself. But what I've seen over the last 40 years of being in that business is that the small employer, and I define that as 50 and fewer, as the Department of Insurance does, has basically suffered the death of 1,000 cuts. There are very few fully insured players left in the small group market. That migration out of fully insured moved into self-funded. We term it under a marketing name called level funded, which is nothing more than self-funded with a marketing tagline attached to it. And for those that are healthy enough to make that move, it's a great alternative. But for those that aren't healthy enough, it's a disaster because they had no place left to go. So many employers, even though they continue to offer coverage, the uptake rate, the number of employees taking the insurance that's offered by employers, right, is on a straight downward decline. It has declined 10% every year for the last 10 years. Okay. So we've got a problem, particularly within the state of Georgia, where we've got a great legislature, I think, that caters to the market sort of taking care of itself. But I think we failed the small group market in recognizing that small employers don't have access to the same resources or benefits that a large employer has. They spend more money. Okay, small employers spend more money to offer benefits that are equal to. Why? Because you're competing for the same talent. The only reason you offer benefits is to recruit talent and retain talent, right? There's no other reason. And if you have another reason, then stop spending your money on it. But if you want to recruit talented people and you want to retain them, I think it's time for a new approach, or at least consideration of a strategy that came along 5 years ago, and that's called an individual coverage, HRA. I will speak to this. We are a founder of this. We're a pioneer in this. I do not, and I will repeat this repeatedly through this, it is not a silver bullet. It is not the end-all be-all to how employers should offer traditional coverage, but it is a federally governed program. It's not a loophole in the law. It is actually governed by ERISA, just like all welfare plans are governed. And yet it does this. It converts, think of this as a defined benefit, which were pension plans. Many of you may remember that if you're anywhere near my age, right? And yet most of the country, most of the employers do not offer a retirement plan that's a defined benefit plan. They offer a what? A 401k or a 403b. Not all of them, but about 75, 80% of employers opted to take that approach. And what they did is they stopped defining the benefit and instead they just defined the contribution. So an ICHRA, worst possible acronym ever by the federal government, right? But an ICHRA does this. It simply says for the employer, once you define how much you want to give to your employees, you're done. It then shifts the responsibility of buying a health insurance plan onto the employee. And for the first time ever, employees can buy a health insurance plan in the open market that best fits their budget, their medical needs, their circumstances. Now, here's the encounters I normally get. My employees aren't smart enough to pick their own plan. And I'll hit these straight head on if you'd like to ask these questions, right? 1.5 million Georgians pick a plan every single year and have for 13 straight years. I'm pretty sure your employees could figure this out. The proprietary part of this is that you're very paternal or maternalistic as an employer. I rarely talk to employers about the strategy where they're not deeply concerned about offering a benefit that's of value to their employees, right? That's their main driver. And in doing so, they want to protect their employees from a bad experience. We absolutely understand that. And that's the goal of those that administer these. And so I bring that perspective as well. I administer hundreds of clients throughout the state of Georgia in this message. My largest client has 5,000 employees. My smallest client has 2. So it's an advantaged tool that sits on the tool belt of all sized employers, but particularly the small employer. There was a piece of legislation introduced last year that would encourage the promotion of this from an educational perspective to small employers and incentivize them to consider this with a tax credit that would start at one amount in year 2, go down in year or start in year 1, go down in year 2, and then end after year 3. The piece that might have gotten missed on this is that it's actually a self-fulfilling tax credit. As small employers moved out of a fully insured environment, they moved into a self-funded environment, which meant the state of Georgia lost, at least half, if not more, of the premium tax that they used to be collecting on the fully insured product. And because it went self-funded, you don't get that premium tax anymore. You get a premium tax if there's a stop loss policy in place. It's not insurance. Stop loss is an indemnification of when an employer exceeds a specific amount of claims. So it's not insurance at all. We market it as that, but it's not. So if the state were to do this and offer an incentive that's a tax credit, which is minimal at best, it actually repays itself in 3.7 years. 3 years and 7 months, the state will now collect more than they did in the tax credit. So and that is in perpetuity because as the HRA Council, which is the national organization I was a co-founder of and sit as the chair emeritus, about 80% nationally of those moving into an ICHRA are first-time purchasers of health insurance for their employees. And the question gets begged is, well, why wouldn't they go self-funded or fully insured? Here's why. To go self-funded, you have to meet carriers' minimum participation requirements and minimum contributions. And if you're a small employer, you're one employee shy of not meeting those qualifications. And therefore, you're bounced out of the program. Or if you're self-funded, your next year's renewals is dependent solely on the claims that you and your employees incur. So if you have a bad year, you get one Skyrizi claim at $80,000 a pop, or 4 Otezla claims at $5 a pill times 2 times a day, all right? Your claims experience is going to be negative, and you're going to get a 38, 48, 58% increase. And if you can't afford that, right, and you can't shift that onto your employees because they can't afford it either, previously, your historical answer has been, I'm sorry, we can't offer benefits. So this is an alternative to that I would beg the committee to consider in this. There's a lot of hype around this. I am not a propagandist. I will end where I started. I'm on a mission around the country to help the small employer. Brokers do that. Professional insurance agents help strategize what is best for that particular employer. A lot of times we feel like we're bagging sandbags and keeping the flood at bay. We're not. We're saving a city. Back to you, Mr. Chairman.
Thank you, Mr. Mixer. And Michael Walker, who came to the last meeting, mentioned the workforce health insurance agents out there selling this, and we appreciate y'all educating consumers on that. If we don't have any, we do. Okay, Representative Williams.
Thank you, Mr. Chairman. That was quite an ending. You saving the city, man.
Thank you.
That'll preach. But let me ask you this. I have a very small group with the Development Authority that I chair. And we as an authority are paying premiums equivalent to what was considered a pretty good salary a few years ago per month.
Sure.
And it is devastating. If I had a private business, it would be bad enough. But the taxpayers are our funding having to pay outrageously. And self-funding does not work for us.
Right.
I'm going to be very interested in following what you do and learning more about what you do. As big as your business is, from the scope you gave, I'm going to leave my card in case I need to float a loan from you.
Yeah, I could do so.
Must be doing all right.
Quick follow-up on that. I'm an employer as well. I have about 300 employees. I moved my employees into this environment 3 years ago. And every year we have experienced a continued savings by doing that. But it wasn't solely cost containment. This was a new way of offering benefits that became a strategy as much as it did a spreadsheet and looking at numbers. Cost containment certainly is a piece of that puzzle. But I'd be happy to have a conversation with you about it.
Thank you, Mr. Mixer. All right, our next speaker is Representative Viola Davis. And while Representative Davis is making her way up there, some people asked about the handout, this and other informative PowerPoints we have. We're going to post those. If you go to Georgia House of Representatives, go to committees, go to special committees, go to Insurance Rate Study Committee. There are a couple of tabs. We've got a lot of stuff already posted there from the insurance department and insurance professors and presenters, and we're going to post these as well. And Representative Davis.
Thank you, Chairman. And to my colleagues on the Insurance Committee, thank you. I wanted to come today to give you some ideas of what I'm running into as an elected official in a county with over 700,000 people in an urban area that I have part of my district that is in an affluent area, and then I have a large part of my district that is underserved and under-resourced. So I'm going to ask you, take into consideration two constituents. The first constituent contacts you and says that they had a tree fall on their home. They end up calling their insurance company, and the insurance company turns around, did an excellent job, came right out, did the assessment of the damages and so forth, and made sure that the company that came to remove the trees was fine, right? Since the people knew that they were going to get their trees removed, I mean, they was going to get paid for removing the trees, and the person who came out to do the construction knew that the insurance company went ahead and initiated a payment of around $13,000, just a little over that. Everybody felt comfortable that they were going to get paid. So the construction company turns in their estimate and their paperwork, and the homeowner goes back and forth with the insurance company. The adjusters, I believe that's who you're going back and forth with. And the insurance company, from one reason to another, kept talking about administrative problems to the point where the homeowner could not get a lot of the repairs done, right? Then they call the insurance company, and the person on the phone said, "Oh, that's it. All you're going to get is just over that $13,000. And the homeowner said, "Wait a minute now. You do know I have a 4-sided home, brick." And they said, "Yes, but that's all you're going to get." And the homeowner said, "Well, you did read the documents, right?" And the person on the phone said, "Yes." And then the homeowner reminded them, "In your initial payment of just over $13,000, you included the payment of removal of the tree. To remove the tree cost about $7,000 to $8,000. So when you subtract that from the 13, I'm supposed to find a construction company to come in and repair my 4-sided home that's over 30 years old for under the costs it took to remove the tree." That homeowner had a problem with that. So if that was your constituent, what would you say? Or how about the constituent in Fulton County? It's a number of condo owners. The homeowners had a fire that burnt down part of the condos. You've seen this on the news. It's in Camelot. The insurance company paid over millions of dollars, but the board members took the money and transferred it out of the condo's account into some of their personal accounts. Now, some of you would say that is criminal, and I'm happy to say that they were charged. There's at least 3 of them that were charged, and I'm to understand, unfortunately, one has passed away that was involved in this crime. But the person, I don't know if any of you remember this, he sent all the paperwork to the insurance committee. It was a disabled veteran. And since I am myself a veteran and come from a family of vets that are disabled, I called him right on the phone and said, "What can we do to help you?" This man could not access the documents. He had to pay an attorney thousands of dollars to be able to get the bank statements. And with those bank statements, he was able to show that they took the insurance money and bid it to their private their private account. If he had not spent his money to get those private documents, this crime would continue to go on. I am standing here to give you just an example of what people are going through, particularly in underserved and under-resourced areas. Now, I told you about the one in Camelot, and you've seen it on the news. But let me give you a little more information on the first one. What would you say if I told you that that constituent is a state representative that sits on the insurance committee? Yes, I'm talking about me. I had that conversation with someone on the phone. No, all you're going to get is 13. And I had to remind them, you have to subtract the cost of the tree out of the 13. And what you want me to do is find a contractor who will repair my four-sided home, brick home, over 30 years old, for less than the cost of removing the tree. Nobody should have to go through that. And when it happens to an elected official that is on the insurance committee, we have a problem. I'm a firm believer that when we do policy, we need to balance the scale. It needs to balance. Right now, there is a problem with greed. And we have to put up the safeguards to balance the scale so that everybody is treated fairly. If you have any questions, I answer, but I thank you because I want to remind you, the people that I serve hire and fire me with their vote. They pay me with their tax money. So in this nonprofit public business called government, the people, we the people, are the employers. And I'm doing all I can to be a good employee. If you have any questions, I'll answer.
Any questions for Representative Davis? Thank you for coming and telling that story. And I think the next presenter is a good follow-up. So Ellie Nelson and Chris Heitkamp.
Chairman and members of the committee, thank you for allowing me to speak today. My name is Ellie Nelson, and I am here as a Georgia homeowner, a mother, and an insured party. You're about to hear my story, and what I hope becomes clear is this. Insurance companies expect policyholders to pay their bills on time, every time, but when it's their turn to pay, there are often no real consequences for delay or denial. For many homeowners, there are no meaningful remedies outside of going to court, and that is not where families want to be. It is simply the only option left. My claim occurred in February of this year. My daughter was 6 months old when a tree fell through our home, nearly about 1 foot to 2 feet away from her bedroom. Instead of focusing on my newborn and our family, I have spent the past 10 months under constant mental, emotional, physical, and financial strain, trying to get my insurance company to honor a policy we have faithfully paid into for over 7 years. At the initial on-site inspection held with our hired public adjuster, who I have here with me, Allstate's adjuster agreed to the full scope of our loss. We believed that meant we could move forward. That understanding was later reversed. Over the life of our claim, the insurance company changed adjusters multiple times and issued more than 8 different estimates. Not because new information was discovered, but because we repeatedly had to point out missing scope items and clear errors in their own estimates. The individuals making decision on our claim never came on site and refused to do so. We were forced to jump through hoops to obtain basic contact information for management and even had to involve our insurance agent to simply try to move the process forward. 6 months into the claim, only after we threatened legal action, another adjuster was sent out. That adjuster had no prior knowledge of our claim and was present briefly. By that point, we were simply just trying to move forward. We eventually agreed to their repair scope and only wanted to discuss pricing so repairs could begin. When they refused to adjust their pricing, we demanded appraisal, which exists to resolve valuation disputes. They refused, first stating that it was a scope issue, then changing their position again to claim it was a coverage issue, which it was not. At this point, I filed a complaint with the insurance commissioner. The response I received echoed Allstate's rebuttal, ignored the issues that I had raised, and inaccurately stated that I denied additional living expenses. Throughout this process, we were forced to come out of pocket to protect our home upwards of $100,000. Most Americans are not in a position to do this. We had no choice but to pursue legal action. After 7 years of paying our policy in full, the insurance company has not paid even half of what it owes us, but has proceeded to increase our annual premium. I understand this legislature has recently passed tort reform to help control costs for consumers, but in the insurance context, litigation is often the only leverage homeowners have to obtain benefits they are already owed. Homeowners don't expect special treatment. They expect fair, timely, and transparent claim handling. Too often they face delays, rotating adjusters, and unexplained coverage decisions. These are a few legislative changes that could help protect homeowners and prevent others from enduring what we have endured. First, claims should be resolved within 90 days unless truly extraordinary circumstances exist. Families should not be left in limbo after a loss. Second, when coverage is reduced or denied, insurers must be provided a clear written explanation tied directly to the policy. Third, appraisal rights must include both scope and value so repairs aren't underscoped and disputes do not drag on. Fourth, the insurance commissioner needs real enforcement authority to address repeated delays and bad faith practices. Fifth, a state-run claim tracking portal would give homeowners transparency into timelines, adjuster changes, and next steps. And finally, adjuster accountability and public reporting of delays are essential to restoring trust. These reforms don't punish responsible insurers, they protect homeowners and ensure the system works as intended. Thank you.
My name is Chris Heickamp. I'm a licensed public adjuster in the state of Georgia and the vice president of IronClaim, a firm that represents homeowners, commercial property owners, and government entities in insurance claims. I've been adjusting claims for the last 15 years. Before becoming a public adjuster, I spent 5 years working inside State Farm. I was trained by the industry. I understand its systems. I understand how claims are evaluated, negotiated, and denied. I did not leave because I disliked the work. I left because I increasingly saw a gap between what policyholders believe they are buying and how the claims are actually handled once a loss occurs. I became a public adjuster to advocate for those same policyholders. A homeowner who suffers a catastrophic loss is immediately at a disadvantage. They are typically displaced from their home, financially stressed, unfamiliar with insurance policy language, and facing a corporation with legal teams, engineers, consultants, and unlimited time. The carrier controls the investigation, the experts, the scope, and the pace of payment. The homeowner controls none of those things. This is not an equal negotiation. It is a system where delay, complexity, and technical denials often work in favor of the insurer, not because the claim lacks merit, but because the policyholder lacks resources. Across insurance claims in Georgia, the issues are consistent. Carriers delay inspections, reports, and payments, knowing that most homeowners cannot afford to wait months or years. Temporary repairs turn into permanent damage, and families drain savings, contractors walk away, and the delay is rarely penalized in a meaningful way. One of the most damaging practices we see is the consistent reassignment of adjusters on the same claim. A homeowner may receive an initial inspection where damage is acknowledged, coverage appears clear, only to have that adjuster removed from the file. A new adjuster is then assigned, often with a narrower interpretation of the coverage, who overturns prior findings without ever having met the policyholder or seen the loss firsthand. In some cases, these processes repeat multiple times until the claim position aligns with internal cost targets rather than the facts on the ground. For homeowners, this creates inconsistent claim positions, loss of reliance on prior representations, confusion, frustration, and delay, and the practical inability to resolve the claim without escalation or litigation. There is no meaningful accountability when carriers reverse their own conclusions. One example of this is in a Georgia claim involving Allstate. The field adjuster testified under oath in the U.S. Senate that his estimates were routinely reduced by Allstate's internal team, including by individuals who are not licensed adjusters. When this happens, policyholders never know who changed their estimate, why it was changed, or how to challenge it. Equally concerning is that policyholders are routinely denied access to the individuals with actual authority over their claims. Homeowners are often told that decision is above my level. I don't have authority to discuss that. The file is under internal review, yet the insured is never allowed to speak with a claims manager, a supervisor with authority, or the person who approved or denied the coverage. This creates a system where decisions are made in private. The insured cannot ask questions of the decision maker, and accountability is effectively shielded. A homeowner should not have to file a lawsuit simply to speak with someone empowered to explain or reconsider a decision. When adjusters are repeatedly changed, prior findings are overturned, the decision makers are inaccessible, the claims process becomes opaque and adversarial by design. These practices shift leverage away from policyholders and discourage legitimate claims, not because they lack merit, but because the process becomes unworkable. I know that one of the things that was talked about is like the increase in litigation and costs. In my experience in the last 15 years, we have had to recommend insureds to go to litigation more than ever. We've had to recommend to go to appraisal more than ever because the adjusters on the carrier side are not willing to negotiate the claim on merit in good faith, and they are forcing people to go to litigation. I think that may be an aspect of the increased cost as more claims are going to litigation, not the fact that the laws are helpful. Under the current law, I believe the bad faith penalties are often insufficient to change the behavior. If the financial downside of delaying or underpaying claim is minimal, then the delay becomes a business strategy, not an accident. For most homeowners, the cost of litigation is prohibitive. The attorney fees are a deterrent, and time works against them. Bad faith penalties must be meaningful enough that compliance is cheaper than misconduct. I would like to see some increased statutory penalties to reflect real economic harm, allow clear recovery of attorney fees when bad faith is established, reduce ambiguity that allows carriers to exploit gray areas. Homeowners should not have to prove extreme or egregious conduct to obtain relief. A pattern of unreasonable delay or underpayment should carry consequences. I believe that there should be some transparency and accountability. We should require clear disclosure of expert relationships, encourage timelines that have enforceable consequences, level the playing field so homeowners can reasonably assert their rights without litigation as the default solution. In closing, I believe insurance exists to restore people after a loss, not to outlast them. Georgia homeowners are not asking for special treatment. They're asking for fair treatment, timely payment, and accountability when promises are broken. I've seen the system from the inside and from the outside. Reasonable reform does not harm the insurance market. I think it strengthens the trust in it. Thank you for your time and your consideration.
Thank you, Mr. Highcamp, Ms. Nelson. We've got a question from Chairman Gullett.
Thank you. I'm from Dallas, Georgia. We had a tornado back in March. And I've had a number of constituents who were harmed by that tornado, their properties. Same situation. This is like, I mean, you described exactly some of the things that they're facing, and because they're displaced, they end up settling for something that they would never settle for because they just needed their life back to normal. And so thank you for your testimony. I'm sorry you're going through this. Representative Davis, I'm sorry you've gone through this as well. This is something that we need to address. I would love to hear, you stated a lot really fast, and I don't write that fast, but if you can email either the chairman and he can just, distribute your suggestions there, I think that would be very helpful.
Yeah, we can forward email and get to you guys.
And I'm curious, what's your status now? So you're in litigation at the moment? Is that where you're at?
Yes, we are in litigation. They, I think if you want to talk numbers, they owe us $174,000 less what they paid, which was roughly around 80. They offered us $5,000 and then came back at 13 grand. So we're now going to court. Our house is repaired. We moved out for about 3 months. And so, I mean, we have now a 16-month-old, so we couldn't really go into wintertime with a massive hole in our roof and drywall missing, and you can't really heat a house that is boarded in tarps. So we made the hard decision to come out of pocket and get all of the damages repaired while we spend the next couple of years dealing with litigation.
What was the issue? A tree or something?
Yes, we had a tree fall.
The whole framing system, water came in.
Yeah.
Thank you.
Thank you.
Thank you all for coming. The fine schedule was mentioned by the insurance commissioner. That hasn't been updated in too long. I will get the committee those 40 or 50 statutes with fines in them so you can weigh in on that over the next week, and definitely that summary, if you can get us that between now and the 23rd, that'd be great. All right, let's hear from Jordan Wooten and Frankie Johnson. Coming, the car insurance company that had a decrease in the bill, that was Chubb. So we've got 7 insurance companies today who are on record as having lower costs now than recently. If there are decreases, this committee will bring that to everybody's attention.
Thank you, Chairman Reeves. Representative Davis, sorry that you had to go through that. Is it Ellie? I'm sorry that you had to go through that as well. My goal today is to bring light to a little different scenario on the same problem. This is rampant. We all know it. We've all heard about it. Representative Gullidge, you've dealt with it. This needs to stop. And I'm not sure about homeowners policy and how statutes and law can fix that, but we can easily fix our problem in the auto industry by a simple change of law. So let me explain just a little bit. And I was told to bring 20 handouts. So obviously that's not going to do it. I'll have these handouts available when I'm finished. And please bear with me. I am not a politician. I am not a public speaker of any means. I am a small business owner. Let me just paint this horror story for you real quick. And Mike, let me just say, bless you and your agents and the agents that work in our community, wonderful people that we're in the Chamber of Commerce together, Rotary together. We have agents that really try. Over the last 30 years, you have no say-so in claims any longer. Is that correct?
I would say no.
Correct. That's correct. So things have changed in the entire process in the environment. Once again, my name's Frankie Johnson. I'm the owner of Styles Auto Care in Cartersville. I bought Styles Auto Care in 2003. It's been in existence since 1965. Along about 2007, 2008, I was seeing the insurance companies really put the screws to independent shops and our customers, our consumers, our constituents. I began to diversify my business along 07, 08, 9, 10. So now I've fortunately been able to sustain some of the problems that we're facing. And I'm going to be brief because Jordan has a lot more information than I do. In my opinion, it is safe to compare today's property insurance carriers to Big Pharma. They have the lobby, they have the money, they have the power, and our laws are simply not strong enough to protect the public, to protect my customer, to protect your constituents. But it can easily be fixed. Look at North Carolina. Look at Texas. It can be fixed, but not without you, not without this committee. We need your help. But the biggest problem we have today is the insurance companies refuse to pay what it takes to repair a vehicle safely or properly, same as your home. They also refuse to abide by manufacturer specifications. These are called OEM procedures. In my business, we have a reputation for honesty, high business ethics, customer service, and most importantly, high quality repairs in our marketplace. We have the training, the skill sets, the equipment to perform high quality repairs per OEM procedures and guidelines. Here's the problem. During the repair process, we disassemble the vehicle to do a complete discovery of all damage caused by an accident. This is called a supplement. Let's say Progressive wrote an original estimate of $5,000. Our supplement brings the total estimate to $12,000, and we present that back to Progressive while also communicating with our customers. And yes, I am picking on Progressive, but I'll also pick on Geico, Allstate, you name it, the ones that own the stadiums and, you see them on TV. Progressive returns this estimate back to us to pay $6,000. They went from 5 to 6. We're at 12. They tell us we're not paying that because of X, Y, and Z. It doesn't matter. They'll come up with a reason. Obviously, this puts us and our consumer, our customer, in a very precarious position with one another. Either the vehicle doesn't get repaired properly, which that's not going to happen at my facility, or the customer has to pay the remainder out of pocket, right? or the shop and the customer has to come some sort of agreement to repair the vehicle safely and properly and get it back on the road. So to compound this nightmare to the consumer and repair facility for that matter, the insurance company will drag their feet for days and months to intentionally delay this repair process. Intentionally, folks, hoping that everyone will just give up and simply cave. We have hundreds, in my business alone, we have hundreds of email threads between our customers and insurers that we have been copied on to prove this exact situation in my business alone. I can't share those with you because of the disclaimers at the end, but I can talk about them. The current rights of the consumer are not much, and it does vary if you're first party, which is the vehicle insured, or if you're third party, which is the vehicle claimant. And I'll let Jordan go into more detail there. Honestly, after being in this industry for nearly 30 years, the exact laws as they are written to protect the consumer, actually not protect the consumer in this case, have just recently become more clear to me. Here's how I understand these laws in a layman's terms, okay? With current law, there's such a thing as an appraisal clause required by law to be written into property policies by some insurance companies, but not all. This is first party, remind you. Problem number one and number two. Currently, not all insurance companies have to comply with a first party appraisal clause. Not all of them grandfathered in. Is that correct?
The new ones they do.
Okay. Number two, there's no appraisal clause for third party claims. If somebody runs into you, there's not an appraisal clause to protect you. At that point, if there's a disagreement between the insurance company and the insured can only the insured can invoke the appraisal clause. Once the appraisal clause is invoked, the insurer and the insurance company must each hire an independent appraiser to compare repair estimates and come to some sort of an agreement, a mediation, if you will. Great. There's a little problems with there. Jordan can explain. But what if you're a third-party claimant? There's no appraisal clause in the state of Georgia for third-party claimants. There's no option for independent appraisers and mediations. If you are a third-party claimant, you basically have two options. File a claim with your own insurance, which may or may not help you because they could be just as evil as the one you're working with. Or if you do that, you can still have negative impact from your premiums going up, right? Filing a claim against yourself, basically. Or you simply pay the difference out of your pocket. Chairman Reeves, you may regret having me up here. I'm sorry. This is the reality of it.
I'm a third party claimant. Remember, my windshield got busted in Savannah, so that is still outstanding. So keep
Still
on
an
talking.
issue.
I'm learning something.
Guys, this is the problem. We need to fix it. Y'all are the ones that can help us with this. Either which, once again, puts the consumer repair facility in a precarious situation. I care about these folks. God put me here to help people. I wanted out. 2011, 2010, I flew my wife to San Antonio, Texas to get out of this business. It didn't work out. God wanted me to stay where I'm at. I expanded my business in 2019. That's when I got big into the mechanical shop and audio and accessories to offset this profit killing industry. Okay, sorry. While all of this garbage is going on, and honestly, the desperately fighting back and forth, taking months and months to resolve, the consumer, the customer either has no rental or their rental has expired. Imagine your niece. Imagine your niece just graduating from college and working downtown. She has no other vehicle and her rental is expired. She has no way to get to work. Or a single mom fighting to survive with her children. I speak this from experience. We see dozens of these scenarios every single month, and I have the emails to prove it. Something has to be done. Let me just share with you real quick. This is an email I can share with you, and I can give this to you. This is why I'm here. Mrs. Landrum reached out to Matthew Gamble, and Matthew met with my collision manager, myself, and Jordan in my office not long ago. And I'll try and be brief. I'm just going to hit the high spots. Progressive's appraisal repair for her Acura was $5,200. Styles collision estimate was $19,500. She invoked her appraisal clause, hired third-party independent appraiser, Jordan Wooten. Progressive hired their independent appraiser through the appraisal clause. Her claim with Progressive got passed from one employee to the next, later notifying us that the two appraisers had come to a legal appraisal amount. We already knew this, but she was not told this. We knew this through Jordan. The two independent appraisers came to an agreed amount of $19,206. This was on 11/17, which she became aware 52 days after her accident. She couldn't get anyone to Progressive to send her a copy of her actual policy or the appraisal clause. She claims them to be dishonest, unprofessional. The car rental insurance, it's been a hardship on her. Her accident was 9/28/25, and I'm standing here to you today praying that she got her car back this afternoon. It's ridiculous. I have multiple emails that I could talk about that I can't share with you. But with that, I appreciate your time. These laws can easily be fixed. And this is the guy that's going to tell you how to do it. Jordan?
No pressure. Well, we're already over here leaned against the wall, kind of shaking. I'm like, the first timer here. My name is Jordan Wooten. I own Wooten Umpire and Appraisals. I am in all 50 states. I do appraisal clauses, expert witness testimony. I'm involved in lawsuits across the nation, class actions all the way down to magistrate. I am hired by both plaintiff and defense. I work for both insurance company and the public. My methods are neutral. I remain neutral to the situation. I usually deal with just values or coaching, teaching, consulting for law firms on property damage claims. Usually, as you know, and as you've heard earlier, most attorneys, I wouldn't say all attorneys, but you'll run into bodily injury attorneys, and they focus solely on bodily injury, and they'll say, we'll try to guide or assist you with property damage. Well, the Tort Reform Act passed, which means a lot less. So now these massive conglomerate, law firms that have law firms across the nation, the ones here in Georgia, are now looking for other ways to obtain that lost money. They are all contacting me. I am getting calls every single day. I've gotten 2 calls from 2 new law firms while sitting in this room. I say that to say we are now escalating the lawsuits, not decreasing. We are going to be filing more of them, not less, but they will be for property damage. There is a resolution. We've heard about the word appraisal several times today. Let's see here. The appraisal clause is that resolution. I have a couple of those copies of already enforced appraisal clauses here in Georgia. McGowan v. Progressive is the case law for that enforcement. The appraisal clause is a way to settle first-party claims. However, that does not go for everyone. State Farm only has an appraisal clause for total losses, and Auto Owners has no appraisal clause whatsoever. I am in Gwinnett County testifying weekly. I am here 2 to 3 times a week. In magistrate court, 1F, 1C, you'll find me there. They are remodeling 1F right now, so everything has moved to 1C. I know that because I was just there. So it all boils down, the difference in pricing is control. Insurance companies do have control of this. However, they are not solely to blame. I work for both, so I see both. I see evidence from both sides. I see claims from both sides, and I investigate both sides. I find fraud on both accounts. So insurance companies like to use these, fraudulent people and across time as examples on why they put these, kind of stop checkpoints in place or excuses on why they don't pay. Because most of the time it's a subjective measure, meaning different people will give you different quotes. However, when it comes to the experts, as you just heard, the insurance independent expert that they hired outside of this also agrees with me every time. If they don't agree with me, for certain, I'm just mean every time with Progressive so far and the problems he's been having. But I do have other shops and customers that we cannot get an agreement on. I'll try to make this as quick as possible, but this is an appraisal clause. If we cannot agree with you on the amount of loss, then we or you may demand an appraisal of the loss. Within 30 days of demand for an appraisal, each party shall appoint a competent appraiser and shall notify the other party of the appraiser's identity. The appraisers will determine the amount of loss. If they fail to agree, the disagreement will be submitted to a qualified umpire chosen by the appraisers. If two appraisers are unable to agree on an umpire within 15 days, we or you may request that a judge of a court of record in the county of where you reside select an umpire. The appraisers and umpire will determine the amount of loss. The umpire or the amount of loss agreed to by both appraisers or by one appraiser and the umpire will be binding. Now there's a liability and everything else after that, just disclosures, but the key word there, binding, meaning enforceable on both parties. This solves property damage first party lawsuits. Now, talking about Gwinnett County, most all, if not all, insurance companies are registered in Gwinnett County, meaning that if you are suing your own insurance company for anything, you are going to court in Gwinnett County. Now, most of these cases are going to be magistrate. However, homeowners and larger than 15,000 will be in state superior or where they're filed. Now, a court of record. This is a problem. This means that if the two appraisers cannot agree, that a court of record would have to decide the umpire. So a judge would pick the umpire after you petition. What is a petition? We don't offer that in Georgia. So there is no solution and it just sits until you file a lawsuit, which all you're asking for is to have a judge pick a person out of a policy language that both parties already contracted and agreed to. Well, that means Progressive or State Farm or Allstate is going to get served with a lawsuit. Now they shut down. They will no longer talk to you because you filed a lawsuit. But that is the only method to get a judge to select an umpire. And Progressive, I know this firsthand, will start doing depositions. They will start doing requests for production. They will start doing interrogatories. They will delay the umpire selection for a year. Big problem. Now, that's if they get it enforced. Now, once Progressive delays it and we do get a judge to pick an umpire, that umpire is selected. Once me and that umpire sign an agreement, that's 2 out of 3. Once 2 out of 3 have agreed, that is binding. Well, if it's binding, why is Progressive still not paying the claim? I've got settlements with him on several of his claims that Progressive is fighting today. I was answering questions with his manager over there and himself on claims where Progressive is now going to still require that the customer file a lawsuit to have their own contract enforced against them. Now, I did bring a couple. I'll try to keep them short. I said I'm a little nervous, so now I'm already off topic, but you know. These are the appraisers that these insurance companies are currently hiring. These are current experts that testify on behalf of insurance companies against plaintiffs. This is a gentleman who is, hopefully it's not too loud.
For years, I had business here. I moved from Buckhead to here in 1990. Right. We built it up. We were doing $5 million a year, and all the insurance people, I'd take them on. I'd rent a boat. These big boats, like you just said, boat captain. I had people baiting the hook for these people.
Right.
Like USA was spending $1 million a year with me. Right. So, yeah.
That is an independent appraiser who is taking higher ranking officials of insurance companies out on a chartered boat in exchange for millions a year. He is currently testifying in court on behalf of insurance companies. That is one.
Help you understand my challenge, man.
But I missed the first part. You were saying
fast forward a little bit
with a regulation. You're breaking up real bad. That's why.
Yeah, there was, before I applied for, business with them, I agreed to review their rules and regulation books on what their policies are for their insurance. and I had to read that, sign it, and stuff like that. So one of the things that I've been challenging is looking at what their rules are and what they're required to do to, before I make any of my decisions, I have to read their rules, okay? So, and we're gonna just, honestly, we're gonna have to let an umpire decide most of these files because some of it is a violation of some of their rules, and
That's a big deal. So that is Progressive's lead appraiser. That is the one we're up against across the entire state of Georgia. That is supposed to be an independent, competent appraiser who just admitted to pre-signing rules and regulations in an appraisal clause and forcing every customer no matter what. That conversation happened before negotiations began. We did not talk about price. We did not talk about differences. He immediately admitted that he's not going to agree with anything that I say, and every one of my customers will have to file suit in the state of Georgia. That includes if they invoke the appraisal clause. Now, that is okay if we change this law.
How do we do it?
That's what we're about to get to. We currently have, now I don't want to attack an insurance company. I want to do plaintiff too. Sorry, won't move on too quick, but here's an email if anybody would like a copy of a plaintiff appraiser refusing to cooperate with appraisal clause. That plaintiff appraiser then convinced his customer to file suit in Gwinnett County Magistrate Court. Magistrate Court is not a court of equity. They cannot pick an umpire. So they were trying to sue for the balance, and the insurance company got it pushed up to state court to have an umpire, or to have the appraisal clause enforced under McGowan v. Progressive. The judge, the Honorable Judge Tracy Casey, Superior Court of Gwinnett County, sided with the insurance company, which she should have. Never should have made it this far. That customer, judges, court time, taxpayer dollars were all wasted for a plaintiff attorney who knew better. I am not an attorney, and I can find that case law in seconds. That same attorney, former Blue Cross Blue Shield, arrested on state fraud charges. The Georgia Bureau of Investigation and Blue Cross Blue Shield assisted the Florida investigation in capturing this guy. Afterwards, he came to Georgia and we gave him a bar license for insurance. He is currently operating today. So there are problems on both sides of the fence here. The solution is a state mandated appraisal clause with the authority for the DOI to select the judge to pick an umpire. Allow our magistrate judges to select the umpires. Do not let the attorneys or any other department, plaintiff or defense, be in charge of selecting a judge. The DOI will have the authority to select a judge in the county of the petitioner or where the vehicle owner resides. So if there's a problem with an estimate amount, if there's a problem with diminished value, which is enforced for both first and third party in Georgia. First party, you can use the appraisal clause to sue and have it paid out. Third party, there is no appraisal clause. We file suit on every claim. I have, in the last 4 years, did over 2,700 just lawsuits, not claims. So first party claim coverage will be enforceable through the insurance contract. We would require that each insurance company have the similar style language of each party will select an appraiser. Those two appraisers will get together. If they can't agree, it'll go to an umpire. If the two appraisers can't agree on an umpire, then the customer or the insurance company can petition the Department of Insurance. They can then contact a magistrate judge or a judge of court of record and have the judge select a neutral umpire. There are several questions that I'm sure some of you have between when an umpire is selected, who and how the umpire, which judge will do it, and appraiser qualifications. Case law already solves that in Georgia. McGowan v. Progressive is the enforcement already for the contracts. The judge's ability to pick the umpire and how they should do it is also case law, independent, neutral, and not a party. It also says in that same case law that if the judge selects somebody who is currently working for an insurance company, that at any time either side may have the umpire ruling overturned if they discover that that person has been working for the insurance company. Third-party claims. Currently, we have no law for third-party claims. we can make an addendum to the arbitration provision in GA Rule 120. GA Rule 120 offers arbitration that is optional for the DOI to enforce. I have contacted Jeremy Betts and several of attorneys and other people at the Department of Insurance. Every single one of them have turned away my customers while trying to invoke the arbitration provision. The arbitration provision itself, we also have current Georgia law and case law that states arbitration cannot be attached to an insurance policy, but yet our own GA Rule 120 says it's the only measure to resolve it. So I would recommend pulling out the arbitration provision of GA Rule 120, inserting an enforceable appraisal clause that if either of the appraisers are not neutral or corrupt or taking people out on yacht rides on the weekends from insurance companies, if that were to happen, so what? So what? Because the Department of Insurance is going to have a judge select an umpire. Right now, if a customer wanted to have a judge to select an umpire, they have to have a lawsuit drafted. So on a $2,000 difference that we can settle in 1 month, we have to wait 45 days if they're in default and have the 15-day correction just to get that to happen. Then we have to wait for the other party to respond. And not only that, the customer has to pay $1,000 to $1,500 on average to get an attorney to draft a lawsuit to file it. Or they're going to have to give up 33.3% of their winnings. With this, that would force both plaintiff and defense, claimant or insured, insurance company or person, to abide by the appraisal clause. If not, you would be able to bring bad faith damages through the 3346 and 3347. But if you don't want to go through Title 33, there is 13611. 13611, you don't have to wait the 60 days. You can just request attorney's fees immediately. This would give the ability to have either side enforced and the other person that actually abided by the law and or contract the ability to recoup their cost in the pursuit. It would also eliminate any out-of-pocket cost for the umpire selection. However, the law would also require that any costs along the way. So if Georgia decides to implement a fee for this invocation, or if the umpire that's selected charges a fee, which most do, 500, 700, what I see, that is split between the two parties and also outlined in appraisal clauses. That would solve every single property damage lawsuit, take both sides out of the equation. The customer and the insurance company do not get to participate or interfere in this process. But let's pretend both do. We still have the state to select the neutral party. So that neutral party would be the deciding factor. They would act as the judge. There would be no lawsuit filed. There would be no case number. There would be no expenses for this. It would be a service that is very little cost to Georgia and would save insurance companies and the public millions across time.
That's how your rates go down.
That is how to get it down. Not to mention the ones that are having to accept a lower value on these claims payments.
If you could wrap it up.
I'm sorry.
Appreciate it.
Yes, that would solve it all. So just to close up, North Carolina already has it in place. Virginia has similar laws in place. Texas is currently passing those laws as well.
If you would mind, gather that up and get that to us by the 23rd.
Yes, sir. Sorry I
Those
took
three
so long.
days.
It was a lot to cover, a little
Yeah,
nervous.
no, thank you. Appreciate you both coming over, and thanks for the information. All right, next witness, Rachel Auer from Georgia Society of Orthotics and Prosthetics.
Committee, I'm so grateful to be here. I am going to be honest. I have 4 sons, so this has been the easiest afternoon I've ever had sitting in here. So thank you. I also wanted to go ahead and address everybody that I am very sorry for your losses, and I have no idea what it is like on that side of insurance. Where I stand is a business owner in Gainesville, Brazelton, and Mulberry, Georgia, with my awesome husband, Jason Oyer. We own Alliance Prosthetics and Orthotics, and we get to treat patients there and offer mobility. It is an incredible privilege to treat patients, and I'm so grateful that we get to do this. This past year, I met many of you while lobbying to get access to ethical coverage by state-regulated private insurance. I'm going to make sure I say that every single time, because if it's not state-regulated private insurance, the bill that just got passed will not cover it. So this is about 38% of our state, and they are now next month going to be eligible for an amazing expansion of coverage where patients who need life-changing, activity-specific devices can now have them. The Department of Insurance is working with us and my fun friends back there that teach me everything that I know right now, because I really have never done anything like this. But because I love patients, I decided to jump in and advocate for them. And obviously you all are serving our state so well because you all believe policy changes people's lives. And thank you for staying till almost 5 o'clock in the middle of December to hear from me. So I'm going to keep it really brief because I learned that last year. That's the most important thing I can do, is be brief and honest. So I have 6 points and I don't have time to cover them all. So I'm going to tell you stories about people because that's really what matters. We had to leave legislation on the table and walk away because state health benefit could not be covered for our patients. And I know that cost matters, and I am a business owner, and I am not asking for something that I don't think is reasonable and measured. It's about 11 cents is what has been quoted to us, what it would increase per member per month. I stand to say I think the insurance company could absorb that cost and not actually ask the state to do this, because my term for insurance companies in the healthcare industry is explicitly vague. They are explicit on what they cover, but it's very vague. So I don't know if anyone has ever played a game called Mastermind with kids. You do this. So you put together a whole pattern, and then someone else has to guess what that pattern is. And then they give you clues as to what one is right. So if red was the first one, you get a special clue that, yes, you were right there. That's what it's like to bill for insurance. You actually don't know what's going to be covered. They tell you this is medically necessary through a very vague document that you do need a law degree to understand. So the nice gentleman who talked about ICHRA, we're switching to ICHRA as a small business owners because it makes sense for us. For my family to carry Blue Cross Blue Shield last year, it cost $25,000. And many of our employees did not take health benefits from us because they couldn't participate by the 50%, because we could only afford 50%, because my husband and I are fiscally conservative people and we want to run a great business to treat people. And so we had to make decisions like that. So to talk about rates, yes, our rates, our premiums, everything's gone up, but yet what's covered is less and less, which is so interesting. So I want to get back on topic, which is Hannah Neighbors. Hannah Neighbors is a 39-year-old woman, and if you all think I'm her age, I appreciate that. She was driving to school with her son and was hit by an intoxicated driver. She ran a stop sign, hitting a young teen driver. Her car did a 360, and Hannah is a teacher, avid runner, and resulting from the accident, she lost her leg below the knee. And the first question she asked after her son whimpered, and if you would like to listen, I have a podcast and she came on and you could definitely listen to her entire story, is, "Oh, don't call that ambulance. I'm not in network." So if you understand the society we live in right now, healthcare is a premium. And we as a state get to regulate how insurance companies treat their members. And I would ask the committee to have a separate study committee. I know you don't have any time, but healthcare is not being regulated for the members who are investing in their healthcare. If they are out of network in the middle of a trauma or a tragedy, they are going to pay out of network, and they don't get to decide who comes. And so Hannah, as a teacher, wanted a special device, and her benefits package did cover a primary device, but because she is not a part of this new legislation, she could not get a running prosthesis. As an avid marathoner, she was not eligible for it. Hannah is not eligible for a shower prosthesis. With our new legislation, it is, but not for her. And so that is one of the things I'm asking for, is that you all would consider what kind of eligibility is available to patients. How could they actually be paying premiums if they are federally regulated? Of course, you know they're not going to be able to have any mandates on them. And maybe one day the federal government will catch up to Georgia. I'm not sure. But I know Hannah Neighbors can run. My husband, who treats her, she lives in Rome, Georgia, and drives 2 hours to our clinic in Gainesville because there was not a clinic between there that would offer her something like my husband and I would do. It was just, we're going to help her get the access to her devices through charitable organizations, as well as her town hosted a 5K for her so she could have a running prosthesis. Her husband recently told us inside our office that he would like to make sure she has a shower prosthesis because in the middle of the night, to put on her specialty prosthesis, it takes too much time and she hops on one foot to go to the bathroom and to shower. And she's a Georgia teacher, a special ed teacher, and a mother. And she thought that she would be covered. This is not deemed medically necessary. I learned this through the insurance lobby last year, and it was kind of jaw-dropping to me. I always assumed it as a medical practice owner, but the lobbyist, Jesse Weatherington, he's very nice, and we came to a meaningful compromise, but taught me that physicians don't determine medical necessity, insurance companies do. And the language that we had in our bill had to be removed because insurance companies will always determine medical necessity. When my husband sits on peer-to-peer reviews to determine whether or not he made the right medical choice, the peer that he is met with rarely wants to speak to him and has no power to actually overturn the policy. But as a prosthetist, you're not able to use your notes or your medical degree to determine if a patient needs this. Instead, you have to get a physician to come on and say, everything you're saying is correct. That is how it works. And so I'm not asking for a change in how prosthetists treat patients. I'm not asking for a change in all areas of healthcare. I'm asking 0.1% of our patients, actually, that's what it makes up here in Georgia, that might need a life-altering device so that they can participate in society. I'm going to talk about 2 patients that happen to be in my office that we didn't win our claims. So Blue Cross Blue Shield of Georgia, they have this fun shell game they like to play with us where you will submit like Mastermind to see if in fact it is going to be a covered claim, even though you've Googled and researched the policy to see what would deem medical necessity based off of their policies. They're not all in one place, and you have to be a detective. My claim to fame at the company is that we got a network with Humana because I called their office and said that I have emptied my bladder and I have 5 hours to waste, and I will not turn off this phone. You must get me to someone who will get us a network. So that is why I'm able to confidently say I'm prepared to work with Blue Cross Blue Shield. I could have stayed on the phone as long as possible. Instead, I was moved to different departments. Blue Cross has a bunch of smaller private plans that they administer, and they will send you to every single one saying, it's not my problem, it's their problem. This department will cover it. That's your, and it's a fun little game where no one pays you for the device that you just delivered to a patient. One of them, who works in the automobile industry and is on his feet all the time and needed a microprocessor ankle so that way he could navigate uneven terrain to, be a taxpayer. And so he ended up getting denied, not medically necessary, because in fact, he didn't actually need it. Who determined that? The insurance policy. And we called repeatedly, we submitted the medical record, but of course, both parties said they couldn't see it. And then when we would call, they said, yes, we see it's uploaded to Availity, which is a system we use, but we actually don't have it in the right portal, so we can't use it. And so we would say, but it's there and there's no other portal. And so then we'd be sent to a different. And so this is a fun game where you just waste your compliance officer's whole afternoon doing nothing. So that way we can lose a $12,000 claim that now the patient is on a payment plan with our clinic paying. Another patient left our clinic without paying his bill because truthfully, he didn't have the money. And you don't know if in fact this is covered unless it's submitted to bill. So we tell every patient, just like our insurance companies tell us, everything we're telling you is not a guarantee. Nothing's a guarantee. Yet, you know what is really guaranteed? That they pay their premiums every single month. They cannot miss a premium payment. And those policies that they have been awarded are an investment. They're not educated on them. They consistently change. And I vehemently disagree that people wouldn't need help picking a health policy because I just did it. They do need help because you don't understand the policy. So with that, I will not take any more of your time. I stand open for questions, but of course, if you all want to run out of here, I completely understand.
Nobody's running, Ms. Oyer. Thank you so much for coming. Any questions? Great job on that bill last year. Thank you for bringing us additional follow-up information, and definitely will welcome any drafts or summaries or anything that we should review for the report or legislation.
Absolutely. The bill is already been drafted, and so hopefully we can garner some support for this next session. Thank you.
Thanks so much. All right, next witness, Ken Presley and Mitchell Goralnick with Georgia Motor Coach Owners Association. And anybody else in your group who's come, looks like you're well represented.
A special thank you to the committee for taking the time to listen to us. My name is Ken Presley. I'm here today representing the Georgia Motor Coach Operators Association as a member of the board of directors of that association. For those of you that may not know, a motor coach is not a motor home. A motor coach is those great big buses that you see tooling down the highway with 50+ passengers, with an elevated deck, and the luggage is below. So a lot of people are surprised how many are out there once they know what they are. And in the state of Georgia, the economic output of the motor coach companies represented here today is over $2.3 billion, paying an estimated $360 million in taxes, with salaries and wages of $698,000, representing just shy of 14,000 jobs. It is a much, much bigger industry than most people understand, and is connected to the travel and tourism industry. Since federal economic deregulation in the mid-'80s, the interstate, intrastate bus and motor coach industry have boomed and provided economic opportunities for would-be entrepreneurs that included women and minorities. State leaders cannot underestimate the social impact of this change and what an economic opportunity it was. I saw a lot of guys that were probably going to be a driver, maybe, or maybe even middle management, that wound up owning their own company and became very, very successful. Many of them are still in business today. It always makes me proud to look out there and see how well those guys have done. The federal requirement for interstate bus and motor coach companies is $5 million of liability. So we are already have a lot of insurance expense in the very best of times. However, post-COVID, this insurance has escalated significantly. The company that was paying $10,000 to $12,000 for each motor coach annually for insurance, it's not unusual now that they're paying $45,000 to $60,000 per coach. This current trajectory is unsustainable, as the consumers of motor coach services are increasingly unable to absorb the cost of chartering buses, and motor coaches ultimately reflect these higher premiums, leading to business failures of these bus companies. And many companies after COVID have decided not to come in, or shortly thereafter have gone out of business. Of course, every trip that does not happen leaves dozens of empty hotel rooms, empty seats in restaurants, and the entertainment venues across Georgia. The culprits include outside jury awards that have effect of what the insurance industry refers to limits pools. And limits pool, you know, we always read in the paper about these big jury judgments and what have you, but the real effect of those is not that claim. The real effect is all the other claims that the insurance companies are going to respond to, and that's going to make them settle for higher amounts based on those previous awards, because they obviously want to avoid court for those. And while the Georgia legislature is taking important steps in tort reforms, there's still more that need to be done. Other impacts in Georgia include the small number of insurance companies willing to insure motor coaches. So reportedly, there's 8. I can only account for 4, maybe 5. One of the largest in the country pulled out of Georgia almost a year ago, leaving us kind of high and dry. And the assigned risk program in Georgia is not viable for the motor coach industry. There are some model states. North Carolina is one of those. Massachusetts is another, where the assigned risk is very viable and it's very competitive in that area. Particularly in the Northeast, many companies have moved to Massachusetts to domicile in Massachusetts and run their operations out of there just because of the dramatic difference in the cost. Recently, a 92-year-old company in Georgia ceased business. And one of the reasons that they cited was the tremendous cost of insurance. We need your help to help stabilize these premiums so we can remain viable in the state of Georgia and protect these jobs and continue to serve the citizens of Georgia. Thank you for your time.
So much for coming.
Stole my thunder.
All right.
So my name is Mitch Gralnick. I'm the executive director of the Georgia Motor Coach Owners Association. Pleased to be here today. Thank you for allowing us to speak. One of the subjects that Ken just touched upon, this 92-year-old company, we're not going to call names, but some of you might know who the company is. So the company folds. There's, I think there was 30 buses in the fleet. So now you have 30 operators and mechanics and office people with no job. I also, I do this as I do this to help the association, continue, but I also have a real job, which is working for a coach manufacturer. One of those drivers, just to give you an idea what goes on, one of those drivers who got laid off, doesn't have a job anymore, came to us to buy a bus, and he wanted to get into the bus business. And we walked him through all the things that you have to do to enter the business. And one of them, when he got to insurance, he found out he needed to come up with $60,000 in cash to start operating a bus here in Georgia. That's not going to happen. It's very, very difficult to do that. So for a new entrant to come into this business and get off the unemployment rolls is very hard. It's almost impossible to do. That's one. The other thing that's going to occur, and now it's going to kind of hit home, is school kids that try to take up collections and sell stuff and do stuff to go on a trip to Orlando, Florida, for their spring trip or graduation trip or whatever. So that trip might be $10,000 or was $10,000 prior to this, meeting today. It's going to go up to $15,000, and they're not going to be able to raise that extra money to go on that trip. So it just keeps mushrooming. Listen, there could be a day where you need buses to move National Guard, and we won't have any because the bus companies are folding and going out of business. So someone really needs to take a look at this. I'm going to leave you with this last thought. You're going to think I'm out of my mind, but you can tell by my accent I'm not from Georgia. So as I drove up from the airport, I see billboards and billboards and billboards and billboards, and you all know what I'm talking about. Now I'll sound like a little bit like y'all. So I'd like you to think about if those billboards came down and different billboards were up there. Obviously, these attorneys, I'm sure there's attorneys in here, so I apologize, but I'm sure they have a lot of extra money to put up a billboard, and those billboards are not cheap. Trust me, because I've tried to put up some for some of my customers. So why don't they take that money, give it back to the industry, so we give it back to the insured in the state, and we would be in a better place. So there's just way too much of that going on. So you need to think about that too. Thank you.
Okay. All right. We have a Georgia Tech public policy student who's been following this committee, Ellie Jenkins. Ellie, come on up. Tell us your thoughts on insurance solutions in Georgia from your research.
Well, thank you so much for having me today. I'm really excited to be here. This semester, I took a class titled State and Local Government with former Representative Michael Pollack. And throughout the class, we were an issue that we thought was of particular importance. And so this committee really inspired my decision to look at auto insurance rates. Next slide, please. So obviously you've heard about a lot of different causes of high auto insurance rates. These are just a few of them, but I ended up throughout the course of my research narrowing this list down to about 7. Next slide. which I would like to talk briefly about today. First is insurance fraud, excessive litigation, and an increase in nuclear verdicts. A lot of people have talked about these. Commissioner King has talked a lot about insurance fraud, talking about how Georgia has the second highest rate of insurance fraud in the country, which is a very significant statistic. One of the reasons why insurance fraud is so high in Georgia is because Georgia is one of the few states where there's no limit necessarily on how much money someone can receive when they go to court. So you can only pay $500 in medical damages, and then you can receive perhaps even 1,000 or double that or triple that because of the way Georgia laws are written. Other causes of high auto insurance rates would be inflation, recent tariffs, and climate change. I feel like these are important to mention because they have such a drastic impact on auto insurance rates, but I see these more as a federal issue to be, I see these more as an issue to be dealt with by the federal government and not something that the state can really significantly impact. Another important cause is high car accident rates, which leads to the problem of high claim severity and claim frequency. A recent study found that Georgia is one of the states where their drivers have the highest at-fault accidents, indicating that Georgia is a state where drivers are not driving safely, leading to insurance companies having to pay a lot more money to cover these claims. And this is also a result of the fact that across the nation, driving violations have increased. Minor speeding violations increased across the nation by 25%, and distracted driving increased by 50%, despite the many laws that states have in place to try and cover this. Next slide, please. So as part of my research, Professor Pollack told me to look at what other states are doing. Throughout this committee, I haven't really seen a lot of people talking about what other states have done, but I think this is an important piece of data to consider. Obviously, Florida is one of the states that recently passed a huge tort reform bill, HB 837, passed in 2023. Part of the things that the bill does is it protects companies from bad faith arguments. So it's a lot harder to argue negligence, or if your insurance company doesn't pay the money in time, it's more difficult to go after the insurance company on that. It also reduced the statute of limitations for general negligence cases from 4 years to 2 years. That's not much of an impact though, because in Georgia, it already is 2 years, as Representative Rees pointed out to me. It also instituted a new formula for juries to determine how much a person should receive in medical damages, hoping to help with the problem of nuclear verdicts. And it did have a huge impact on that. It led the state to drop from having the second highest number of nuclear verdicts in the United States to the 10th most. Meanwhile, Georgia still continues to struggle with this due to what I pointed out before. It also lowered auto insurance rates by 8.2% over 3 years since this bill has been passed. Another significant impact for consumers, and also just general decreases in claim severity and frequency. Next slide. So California, my professor told me that to be very careful when talking about states such as California, because representatives and people in government can kind of see them as these granola eating hippies who live way over there on the West Coast. But I think it is important to consider because they do have they've been very successful in the realm of lowering auto insurance rates. First off, they also have a prior approval system like what Georgia has, but they're it's a lot more difficult to get insurance company rate hikes to be approved. So insurance companies have to work really hard to prove that their insurance company rate increases are necessary or important. They also force insurance companies to rely more on driving-related factors, which helps increase the safety that they've had throughout the state, because you're going to be less likely to get into car accidents if that's going to impact your insurance rates. And it also prevents insurance companies from making consumers pay for inefficient company costs, such as inflated CEO salaries and lobbying costs. This is done through cross-checking proposed rate hikes with the company's profits and ensuring that the company isn't charging excessive rate hikes in order to pay for things that California sees as not necessary, like CEO salaries or lobbying costs. Next slide. This has been extremely successful in California. California has seen a 12.5% increase in their auto insurance rates compared to 61.1% nationally. That is a difference of almost 50%. Meanwhile, a recent study also showed that if Georgia were to adopt the rules that California has, I'm not saying that is probable or reasonable, but if they did, they would save over $2 billion for consumers, another significant number. Now, one thing I really wanted to look at when it came to these strict rules and this anti-insurance company kind of system that California has was whether insurance companies had actually left the market due to this. What I found was rather surprising. Yes, State Farm, Allstate, Nationwide, and other extremely large insurance companies had stopped providing property and homeowners insurance to customers. This is significant because in California, we already know why no one wants to insure those in California. There's a lot of climate change problems that are going to impact people's houses, like how the hurricane in Georgia recently caused rates to go up. Specifically, property and homeowners insurance, that is happening in California. However, these large insurance companies have not increased rates on things such as auto insurance or medical insurance. If the prior approval system and the very strict laws California had actually was impacting their ability to make a profit, you would see more of these insurance companies exiting the market, which is not something we're seeing now. Next slide. Another state that I wanted to mention was Virginia with SB 456. I heard a lot of people in the meeting today talking about the problem of their claims not getting paid back in time, or they're not getting paid enough from their claims. So I feel like this bill would be very significant in addressing that problem. SB 456 requires auto insurers to pay double the judgment amount if the court finds that the insurer failed to pay property damage, medical expense benefits, or loss of income benefit claims in time. Sorry, I feel like I'm talking too fast. So this would make it so that if insurance companies fail to pay someone's claims, or they're really making this process so long and laborious, they would have to pay a lot more money to consumers, and they would be less likely to drag out these claims as long as possible. This bill has been successful, and car insurance rates have decreased by 200% in Virginia since this was passed. Next slide. Next slide. We're going to skip that. So the next part of my research process was I went to a variety of different people that know about insurance, are impacted by insurance rates, and I interviewed them asking what they thought. Representative Reeves was one of those people that I interviewed. And I learned a variety of new things. First off, insurance fraud may not be as significant of a cause as I previously thought. I'd initially found insurance fraud to be a very significant cause of why rates were being so high. However, no one that I talked to really found it to be as significant as what I was thinking. In fact, some people found too little litigation to be a problem, and that the fact that there was too little litigation was causing consumers to think that the system was stacked against them. Current Georgia laws are making it so that consumers are feeling squeezed out by the current system and are left with no alternatives. If every single auto insurance company is raising their rates, their consumers are going to have nowhere to turn to. Next slide. SB 68 and 69, the tort reform bills passed in Georgia, were successful, and that's what I found out in my research, which was good. However, I feel like they only addressed one side of the issue. These had to do with pro-insurance companies and helping them deal with the problems consumers may be causing for them. So insurance fraud or those kinds of things. However, there haven't been recent bills that have to do with helping consumers and potentially reining in insurance companies. That doesn't matter. Next slide. Which leads me to my final recommendation for the committee to consider, and that is to amend Georgia Code 33942 concerning reduction in premiums for motor vehicle liability, first-party medical, and collision coverages for certain named drivers. Currently in Georgia law, there is a way for you to reduce how much you're paying for auto insurance in Georgia if you meet certain requirements. If every single person on a family or individual plan has not committed a traffic offense for the past 3 years, has not gotten into an at-fault accidents for the last 3 years, and have taken some kind of defensive driving course for at least 6 hours, then the people on the plan will have a reduction of at least 10%. So this is an easy way for consumers to save money, right? Well, it would be if this was accessible to more people, which leads me to my amendments. Next slide. First off, I would require the Department of Insurance to annually determine the minimum insurance rate reduction in order to account for inflation or relevant economic factors. In the current law, it is set at a minimum of 10% for the entire plan. However, I feel like the Department of Insurance should be able to determine what that minimum percentage is year by year in order to account for whether companies are potentially losing profit or if they're having a very successful year. I would also apply premium reductions on an individual basis. In current law, every single person on a plan has to have taken that defensive driving course or not have gotten into an at-fault accident or traffic offense. This means that if one person on your plan of 5 people runs a red light, your 10% reduction in your rate is gone. I feel like that is unfair to everyone in the plan, and instead premium reductions should be applied on an individual base. So perhaps 2 to 5% per person if they meet the requirements. That would also be applied in the opposite. So if one person runs a red light, everyone else still keeps their reduction. I would also consider repealing the subsections B1 and B2, which talk about how you have to have had not committed a traffic offense for 3 years or not have had an at-fault accident. I feel like the people who would need this bill the most and would most benefit from taking those defensive driving courses would be those who have gotten into an accident of some kind. Therefore, by repealing those subsections, it encourages the people who have already proven themselves to be dangerous drivers or in need of those defensive driving programs to actually take these. Next slide. I also forgot to mention, this would really help with the cause of high claim frequency and severity and the problem in Georgia of the fact that so many people are getting into car accidents. So therefore, by making them take these defensive driving courses and providing them with an incentive, it would greatly decrease that. So additional considerations. These are things that will help with the efficiency of the bill, but don't necessarily need to be passed in order to have the bill be successful. First is to provide financial assistance for defensive driving programs for families under a specified income threshold. So if a family makes under a certain amount, they are in desperate need of this reduction on their auto insurance rates. So the government should pay for part of it or all of it so that they can take these 6 hours of defensive driving courses and receive that rate reduction. I would also implement public information and outreach campaigns to increase awareness of this law and promote insurer accountability. I did not know this was a law until yesterday, and here I am today talking about it. How are we going to expect consumers in order to know about this law and take these defensive driving courses and know about their opportunity to lower rates if we don't have these kinds of public information campaigns? As such, and the way I understand it through current law, the person who is on the plan, so the individual, has to notify the insurance company that they meet these eligibility requirements in order to receive that rate reduction. My mom potentially meets these requirements because she's taken that defensive driving course. However, because she didn't know about the law, she did not receive the rate reduction. Therefore, by establishing a streamlined system for insurers to automatically apply premium reductions, so the defensive driving companies can notify the insurance companies directly about this, it will make it so that the consumer does not have to get caught up in the middle and notify people and notify the insurance company about this, and more people can benefit from these rate reductions. And that is all I have for you today. Thank you for listening. I'll take any questions.
Ellie, thank you so much. I know it's hard to get an A at Georgia Tech, but I think they ought to give you an A on
Thank you.
this. So thanks for this research. I know the insurance commissioner is looking into some auto insurance issues. His office is here, and we will get this posted for everybody to review. So thank you for putting this in our hands and all the work
Thank
that
you for
you
listening.
did on that. All right, I have one more witness signed up, David Witham. Did I miss anybody? Do we just have one more witness? We've been at the state capitol, we've been to Savannah, we've been to Macon, we've been to Gwinnett. We got one more witness. So last but not least, David Witham from Gwinnett County.
Why do I suddenly feel I'm the person standing between you and getting out of work for the day? That's 3 minutes. That's all I ask. I am the kitchen table. Everybody talked about kitchen table effects. I am the kitchen table. I talked with the fellow representing the insurance company or the insurance department earlier. I would be classified as the working poor. I wasn't the working poor last year. But through reduction and the inability to find a job, I'm now the working poor. I had to make a decision yesterday on insurance, or Monday, on insurance for my wife, because luckily I'm 65 and I can be on Medicare, which is the best insurance I've had in 40 years of a working life. But my wife basically had to take, we don't have the money for it, but I'll have to find the money for it, because it's either that or no insurance at all for my wife, who's 59 years old and a cancer survivor. But it is what it is. Insurance, health insurance is not affordable in the state of Georgia currently. And what you have heard today, and I guess the point that needs to be brought home is this. One, and Professor Holt, and I guess the guy's name was Mike, said indemnification. People need to be made whole and need to be made whole in a proper time. Please make sure you address that in your bill. Secondly, there are a class of people, I represent that class now, that are in between poverty, 38.8 for a couple. I don't qualify for SNAP. I don't qualify for Medicaid. And people who can actually afford to live. I'm in that camp. Remember, there is a large number of those people, and I hate to get political, or I hate to get crass, but I'm going to bring politics into this. Your election this coming November and the primary hinges upon tort reform, which people have been told they gave up some efforts in terms of this tort reform, but now they see very little to no reduction. I'm on Allstate. After today, I'm going to get rid of Allstate. I'm sorry. State Farm 10%, college try, but come on, folks. If I were running against any one of you and I were doing op research, the very first thing I would put up is you gave up some of your recovery capability with tort reform. And what did you get for it? Did you get a decrease in your insurance premium? I can tell you my insurance premium in the last 5 years has gone up 45%. Okay? And I've done the defensive driving. I've done everything that you can do to get it. I've got my kids all got straight A's, the whole 9 yards. You can't get any more. I drive old cars. The issue is that people have given up stuff, and right now they haven't gotten a lot for it. So keep that in mind when you're making the rules. Timely indemnification is absolutely critical. Thank you for letting me speak.
David, thank you for coming. I think that was a good last presentation of this committee. I'd like to thank the committee members for your work. We stand adjourned.